Yes, good morning, students. Good morning. I am CA Rajiv Sachdeva.
Yeah, good morning, student. Myself, Nisha.
And students, today we would be taking another case study, that is case study 17. And this case study has also been hosted in the RTP. This case study is also covered in the RTP of May 24 examination. This is case study 2 of RTP. And students, meanwhile, how is your preparation going on? And what are your general queries? If any, we would like to answer, students. And then we will be doing the case study. Yes, are there any queries, Nisha madam?
No, sir. As of now, there's no such query related to the IBS, sir.
Okay. Okay. Yes, students, whatever queries you have, you can post your queries on the mail and we would be giving you the relevant answers. And students, uh, how is your preparation going on? In the meantime, you can also tell us, and accordingly, we will answer your queries.
First
And
of all, sir, let's welcome to our students because they all are greeting us.
yes,
Yes, good morning, Viraj, Shankar, Suraj. Good morning to you all. And
good morning, all of you students.
yes, sir.
Yes, going to the case study, which is there in RTP, and now we will be sharing screen with you. Yes, students, are you able to see the case study? Are you able to see the case study on the screen?
Yes, student, kindly let us know. Is our screen is visible to you so that we may proceed further with our case studies?
Yes, students, yes, are they able to see?
Yes, sir. Yes,
Okay,
sir.
okay, okay. This case study, uh, in this case study, YPL is a company which appointed Chappan and Company as its auditors, statutory auditors, in place of previous auditors. And all the formalities of the Companies Act are complied with in relation to appointment of statutory auditors. And they made the statutory auditors, they have uh, they have done a written communication with the previous auditors before accepting their appointment. Now, CA Kailash, who is one of the senior partners of the firm, he was appointed as engagement partner in such audit assignment. Now, YPL is the company which has appointed its statutory auditors, Chappan and Company as its auditors, and CA Kailash is the engagement partner. CA Kailash has observed that there were certain accounting estimates. तो स्टूडेंट्स, जो ही आप accounting estimates, as soon as you hear about accounting estimates, so what is there in your, which essay is coming to your mind, which essay standard on auditing is coming to your mind? Yes, I am waiting for your answers. So CA Kailash observed that there were certain accounting estimates made in relation to certain items of financial statements. So in relation to accounting estimates, students, essay 540 is there. Essay 540 is there. Essay 540 is in relation to accounting estimates, including fair value accounting estimates. that might give rise to significant risks. Now, that might give rise to significant risks. Now, what is significant risk? So, I will be explaining to you what is significant risk, what are accounting estimates. So these are the key terms which, as an auditor, as a student of auditing, you must know these terms. And thereby, he performed substantive procedures in accordance with SA 330, the auditor's response to assessed risks. So this para totally relates to auditing. SA 330 reference has already been given and the question is talking about SA 540. Further, CA Kailash determined that there were certain factors that indicated the existence of certain transactions entered into by YPL for which misstatements of lesser amounts than materiality for the financial statements as a whole. Materiality for the financial statements as a whole. Materiality for the financial statements as a whole. So auditor determines the materiality for the financial statements as a whole. So this is the overall materiality level, students. Overall materiality level for the financial statements as a whole. So if you read this line, so which essay strikes your mind? Which essay? This is of course essay which you have studied in intermediate or also you have been doing in CA final. So practical aspects, practical application of this essay is in CA final and theoretically you have understood completely in CA intermediate. So student essay 320, we are talking about essay 320 so far as audit materiality is concerned. So
Essay 320.
320, yes. So for which misstatements of lesser amounts than materiality for the, so auditor is, so if determined that there were certain factors that indicated the existence of certain transactions are there for which misstatements of lesser amounts than materiality for could reasonably be expected to influence the economic decisions of users taken on the basis of financial statements. So if lesser amount than materiality for the financial, so this is known as performance materiality. Means question is the relevant para is talking about performance materiality. Accordingly, CA Kailash lowered his materiality level determined for such. तो क्वेश्चन स्टूडेंट्स हम देखेंगे कि उसने क्या फ्रेम करके पूछा है. तो अभी एज ऑफ नाउ ऐसे 540 ऐसे 330 का तो रेफरेंस क्वेश्चन में दे दिया केस स्टडी में और ऐसे 540 और ऐसे 320 दो एसेज हमें यहां पे नजर आ रहे हैं केस स्टडी के अंदर. यस, अपार्ट फ्रॉम कंडक्टिंग द ऑडिट असाइनमेंट मिस्टर कैलाश आल्सो यूज्ड टू सॉल्व the concern raised by the accountant of YPL with respect to GST and income tax matters. One such concern raised by the accountant to him was with respect to ITC availment under GST, which is briefed as under. तो ITC availment की स्टूडेंट्स बात हो रही है in next para. The balance of ITC opening balance after discharging the GST liability for April month was 60 lakhs. Eligible ITC reflected in GSTR 2B. GSTR 2B. This is ledger of ITC. GSTR 2B is ledger of ITC. With respect to May month of YPL was 56 lakhs, whereas the ITC input tax paid by it on the invoices received during the month was 75 lakhs, and the output tax liability was 110 lakhs for the month of May. So he was not sure about the amount of ITC to be billed for. So he was not sure about. It means question would be related to the ITC related to the month of May. So this is because he was not sure about the amount of ITC to be availed for the month of May, for which he consulted CA Kailash, and after following his advice, GST liability for the month of May was discharged by YPL fully through its balance in electronic credit ledger only. So students, till now auditing, two questions relating to auditing seems to be there and one question relating to GST. Next para 3 is talking about CSR activities and Foreign Contribution Act 2010. YPL provides donations every year as part of its CSR activities to charitable trusts, SKT, Shiksha Kalyan Trust, engaged in activities of providing education to poor children. Average profit is given, and accordingly during financial year, it made a donation of 2 crores to SKT as its CSR spend. SPL, its subsidiary, also proposed to make donation to such trust in India during the same financial year. However, SKT's certificate of registration under FAKRA would expire on 20th December 23, and it did not apply for renewal of certificate before that, as the head accountant believed that they could apply for renewal within a renewal. You know all that under FAKRA Act, renewal of certificate is there. Renewal of certificate is there. So when the certificate would be renewed, so head accountant believed that they could apply for renewal within 1 year from the expiry date as per the law, and hence pending. But the trustees decided to make an application for renewal for certificate sooner as that, so that trust can accept donation from SPL, and the same was done as per the relevant legal provisions. So, what is your take
Yes,
about
sir.
this para?
Actually, this is the para which deals with FCRA. So in the FCRA, if you know, this is the act which deals about the foreign contribution or with respect to the foreign hospitality that any person or company or association can have with respect to the foreign contribution. So here in this case, there you require under the FCRA, basically when you have the certificate of registration with you, then only you can accept the foreign contribution or the foreign hospitality. So that way, the legal validity of the this certificate registration is 5 years. But here, once it being get expired, then there is a requirement of renewal of the certificate registration. So that way, this paragraph deals with the renewal of the registration certificate. So accordingly, you have to go read this para first, and then in line with the requirement of the law or as per the requirement of the act, what is the compliance part that needs to be fulfilled in order to get the renewal of the certificate registration. So when you will take up the question, at that time we will just make you a comprehensive understanding of this particular legal provisions, what are its requirement and how it can be done, and who is the competent authority who is the competent authority who gives this renewal part of validity, how it can be done. So that will be taken up in detail while dealing up with the particular question.
So YPL para 4, YPL bought a machinery from Dusham Limited for its business, for which YPL received a government grant of rupees 6. Students, earlier I also told you that wherever you see government grant, so आपके दिमाग माइंड में कौन सा इंडेस आ जाना चाहिए. सो कौन सा इंडेस स्टूडेंट्स गवर्नमेंट ग्रांट से डील करता है. सो ऑल ऑफ यू आर अवेयर और सिंपल इंडेस है, दैट इज इंडेस 20. तो इंडेस 20 स्टूडेंट्स deals with government grants, and Shilpa madam, T.A. Shilpa Agarwal madam would be taking the relevant question in relation to this. The details of machinery are as follows. List price of machinery is given, then primary packing, this is corrugated boxes used for packing the equipment not included in price above 60,000, and discount at the rate of 2% is offered on the list price of the machine recorded in the invoice of the machine. And as a part of its policy, YPL depreciates all its machinery at 20% per annum on straight line basis, and also it doesn't claim depreciation on GST component. So question, this is a mixed question relating to FR and GST, both GST, because from this line you can assume that it doesn't claim depreciation on GST component included in the price of the plant and machinery. Yes. On 20th January, YPL supplied 2000 metric ton steel pipes to SPL at rupees 1 lakh per metric ton on CIF basis. And SPL is 100% subsidiary of YPL. This is somewhere mentioned in the question, I think. And on CIF basis, insurance and freight of 11,000 per metric ton were included in it. Also, on 5th February 24, it made a supply of 3,000 metric ton steel pipes to another Singapore-based company, UPL, at 95,000 per ton on FOB basis, for which payment was to be made of Singapore dollar 5 crore 70 lakhs in 3 months. And so, in order to protect itself from exchange rate fluctuations, YPL hedged receipt of such foreign currency in a forward. So, question seems to be of international taxation, students. So, now we move to the question part. So, first question is, this is related to international taxation. So, we will be dealing with this later on because it is based on para 5. Moving to question number 2, students.
Yes, question number 2. This question is pertinent to paragraph 1. And here you'll be seeing that question is asking what formalities would be complied by YPL with respect to the appointment of Mrs. Sunita as a director in SPL Limited. So first thing that we need to go is what is the fact given over here in the paragraph 1, so that you can easily correlate the question that has been asked with reference to. So let's see what paragraph 1 talks about. The paragraph 1, it basically says that the nature of the company given is unlisted public company. And it further says that the companies had 9 directors on its board. And there is another company in Singapore named SYDPTL, SPL in short, let's take it that way. This is a company in Singapore, SPL, in which it acquired 54% stake. That means SPL is a subsidiary company, because if you see, YPL is having a shareholding of 54%. That is why here we can say that SPL is a subsidiary company to YPL. So in this, you will be seeing that further that Mr. Sunil Verma, who has been appointed for the second consecutive term of 5 years as the managing director of YPL, he is having a daughter, and that daughter, Mrs. Sunita, who is residing in Singapore, has been appointed as a director in SPL, that is in its subsidiary company. So that way its remuneration has also been given over here. That is Singapore dollar 60,000, which is equivalent to 3 lakhs. Okay, that means the daughter of Mr. Sunil Verma has been appointed as a director in the subsidiary company of YPL, and whereby she is holding a remuneration of 3 lakhs. Okay, now you have to find out what exactly the question is asking about. Let's see once again with the question to understand. Yes, with reference to the information, already I've in a brief, I've elaborated you the facts. Now it asks what formalities would have been complied by YPL. YPL is the parent company, the holding company, with respect to appointment of Sunita in its subsidiary company. So looking at it, you feel like, first of all, you must be finding, yes, there is a definition of relative, because the father and a daughter. Father is a director in the holding company, whereas the daughter has been appointed as a director in the subsidiary company. So somewhere you can make it out that there is a relation between the directors, and that too between the holding and the subsidiary company. So this will give you a clear, your mind will just click on considering this aspect. Yes, somewhere it is related to the related party transaction. And if you talk about the related party transaction, it is being given under section 188 of the Companies Act 2013. And when you read the related party transaction, you should also be aware of what is the related parties, who are the related parties, and when they can be said to be related with each other. So everything is given within the act to bring more clarity. If you see the related parties, if you see the relatives, everything has been defined under the Companies Act under section 2 subsection 76 as well as under section 2 subsection 77 of the Companies Act. So whenever you are reading section 188, you also should be conversant with section 2 subsection 26 as well as section 2 subsection 77 of the Companies Act 2013 in order to understand how they are falling within the ambit of section 188 altogether. If you see section 188 of the Companies Act, basically it deals with the transactions that take place between the related parties. Very simple. As the name applies, related party transaction. That means the transactions that take place between the related parties. Okay, so this was introduced with an intent in the law to create transparency and accountability between the parties to the transactions. So this is applicable, in fact, to both the nature of the companies, whether it may be a public company or a private company. So it is necessary to contemplate that all the aspects before a party decides to enter into a related party transactions. Means whatever the thing is necessary, that should be looked into it before it is being decided to enter into a related party transactions. So you know what was the reason behind the introducing of the section 188 of the Companies Act. So if you see the section 188, the Companies Act was introduced with an intent to ascertain the accurate financial position of the company so that the level of the transparency when any transactions take place, that can be make it out. And this also gives a huge the amount of responsibility to the board of directors to review, to approve, explain and recommend the parties related to the transactions as well as the shareholders to seek their approval. In fact, this encourages the disclosures part, accountability, communication, and proper monitoring while any transaction takes place between the related parties. So this also, in fact, discourages, various kind of the fund diversions that take place in the name of the related party transactions, so that any kind of the extra benefit or the profit of the company that takes place without any traces. So that way it puts the restrictions upon the, this kind of illegal fund diversions between the companies in the name of the related party transactions. So that is why I'm saying that when you are reading section 188, now you need to understand section 2 subsection 76 also, because it defines what are the related parties. When you are aware when any parties can be said to be related party, then only you can make it out that any transaction entered between the related parties can be termed as a related party transactions. So you need to go with section 2 subsection 76 in details in order to understand who all are the related parties. But yes, the person, I'm just giving only with reference to this particular question. Yes, the person who is a director, okay, or his or her relative. And since in the question, Sunil Verma is a director in the holding company and his relative is the daughter who is also being appointed as a director in subsidiary company. So here, simply Ms. Sunita as well as Sunil Verma, they are being considered as a related party, right? So this is being covered over here. Then also you need to check up with the definition of relatives also. That is being given under section 2 subsection 76. So if you see this particular section, it is to be read with the rule 4 of the company specification of definition detailed rules 2014. So who all are the relatives, it is given over there. So there is a relation of daughter also. So that means if a person is a father and his daughter, so they will be considered as a relatives as per section 2 subsection 77. So they will be covered under this part also. So now coming to the transaction part. So if you see section 188 you have to read with along with the rule 15 of the companies, the board meeting and its power. So there this rule 15 defines what are various sort of the activities or the transactions that take place under section 188. So there it defines that the transactions which are associated with any purchasing, selling or supplying of any particular goods or the materials that will be termed as the transactions which are being covered under section 188, further buying or selling of any kind of property or disposing of it, or any kind of property that can be given on lease, availing or rendering any kind of services, and the purchasing or selling of any goods, materials, property or services through the agent. They are also being covered under the section 188. Further, the important aspect with respect to the appointment or placement of a related party to any registered office or place of profit in a company or in its associate company or in its subsidiary company. So that will also be being covered under section 188. And since here you'll be finding that appointment of Miss Sunita on the remuneration of 3 lakh, that means this is the transactions which is pertaining with respect to the appointment of Miss Sunita, that is of the related party, to the office or place of profit in a company. But however, a threshold limit has been marked. It said that if the remuneration is more than 2,50,000 rupees, then it will be falling under this 188 section. So here, since the remuneration given in the question is 3 lakhs, so definitely this will be falling under the section 188 scope of it. And that is why if you see the following options given over here, now it is asking whether any formalities would have been complied. The first option is given is that no, as such appointment did not amount to appointment of Mrs. Sunita to a place of profit in SPL. So if you see, such appointment did not amount to appointment of Mrs. Sunita to an office or place of profit in SPL. This is a wrong answer in itself, because if you see what was the requirement, I've already told you. If the remuneration part is exceeding, 2.50 lakhs, then only it will be falling out of the ambit of this section 188. Matlab, it means that in order to cover within that scope of 188, you need to see what the threshold limit has been prescribed in the Act. It says that where the transaction is related to the remuneration, it shall be more than 2,50,000 to be fall under this section. If it is less, then it will not fall within this section. If it is higher than that, then it will fall under the related party transactions. So here, first option is wrong. Now moving to the second option, it says that yes, as Mrs. Sunita was a related party, so already I've said yes, it falls under within the section 2, subsection 77. So it falls within as a related party to YPL, and she would be drawing a monthly remuneration exceeding 2.5 lakh in its subsidiary company. So yes, that is also being seen over here. So we can say yes, that way this option seems to be right. But before giving any options as a right answer, we have to go through the other options also, so that we may see it may be possible certain more appropriate things has been given in other options also. So first you have to read the entire option and then you need to find out the most appropriate answers. Now moving to the option C, let's see what it says. It says that no, as even though Miss Sunita was a related party to YPL, but she would be drawing remuneration from SPL, its subsidiary company, and not YPL itself. So this is altogether a wrong justifications. So this is also not a correct answer. Then moving to the option D, no, as such provision with respect to related party are not applicable in relation to foreign subsidiary companies. So if you see, the provision nowhere talks about the foreign subsidiary company also. So that way this option is also not a correct in itself. So that is why here the most appropriate answer will be option B. Okay, but there are certain approvals has been marked. If this limit is exceeding, you need to go with the approval part. So it says that whenever you need to go under any transaction under section 188, they can take place only when a prior ratification by member of the company is taken. So it can be either through directors, shareholders, or through the audit committee, which is to be done by passing a resolution as provided under Rule 15 of the Companies Act. If that prior ratification of the members of the company has been taken, then such, you can say, related party transaction is also possible, but that approval part is required. So that way, this is the, here we can find out accordingly, yes, the Option B is the correct answer. So let's go to the reasoning also that way. Actually, this section is very important from the examination perspective also, because many times section 188 has been asked with respect to check out what are all the transactions that can be covered under section 188 and what are the compliances that need to give approval to such types of the transaction that is made between the related parties. So somewhere there are being required the approvals from the board of members. Somewhere the approvals are being also required from, from the members of the companies, and also sometimes from the audit committee. So these are certain approvals that has been given, that which is being need to be taken while conducting any of the related party transactions. So yes, the answer given under section this question number MCQ number 2 is that answer is B. Because section 188 of the Companies Act should be read with rule 15, already told you, and it has been said that who's related party, that I've already told you. You need to go with the proper reading of this section 276 of the act in order to understand who all are the related parties being covered over here. So here it has been given that with reference to a company means a director or his relative. So here Sunil Verma was a director and his relative Sunita was his daughter. So that way it is being covered under within the ambit of the related party, right? And further, as per section 188, it says that any transaction or transactions to be entered into a contract of arrangement is for the appointment of any office or place of profit in a company or in its subsidiary company or in its associate company at a monthly remuneration which is exceeding 2.5 lakhs. It can be done under section 188, but through the approval by an ordinary resolution. If this is exceeding the limit, it can be done, but you require the approval. Got it? Since here in the question, it was 3 lakh remuneration, and that is why it is being required the approval under the resolution passed by the company through the members. So that way, we can say the option B is the correct answer. Yes, sir. Now moving to the next question. So it's a request that you kindly go through the legal provisions so that you have a clear conceptual understanding of the subject. Because unless and until you don't have the clarity of the legal, aspect of the relevant legal provision, you will not be able to solve the MCQs. And MCQs basically test your, that understanding of the laws. So it basically required that you have an in-depth knowledge of the legal provisions. So read the law carefully and then you solve all these questions so that you can accurately mark the correct answer.
Yes, students, going forward, now Shilpa madam would be taking the India's part, which is relevant in this case study. So India's 20 related part, which is there in para 4 of the case study. Shilpa madam would be explaining the relevant part. Yes, Shilpa madam.
Hello, students. So first of all, let us read this part again and then we come to the solution. Okay. So it is ये move नहीं कर रहा ऊपर screen. Screen move नहीं कर रही है. Okay. YPL bought a machinery from थोड़ा सा ऊपर. वो ये लाइन स्ट्रिप आ रही है ना. चलो मैं यहाँ से पढ़ती हूँ. YPL bought a machinery from Dusham Limited for its business, for which YPL received a government grant of rupees 6 lakhs. The details of machinery are as follows. List price of machinery exclusive of taxes and discount 30 lakhs. So be careful, students, in this question. This 30 lakh does not include any portion of taxes and discount. This is exclusive value of 30 lakhs. Corrugated boxes used for packing the equipment not included in price above is 60,000. These boxes are also part of your inventory because they are whatever your goods are there, machinery, these are packed in this box only. So this also forms part of the cost of that inventory or the goods. Discount of 2% is offered on the list price of the machine. Okay, so discount which is there, we have to calculate, it is 2% of the cost of the machinery, and machinery which is given above is exclusive of discount value. So we have to compute discount on this above figure, that is 30 lakh rupees. As part of its policy, YPL depreciates all its plant and machinery at 20% per annum. So here, students, what is important for us is, first is government grant of 6 lakh rupees, because will be using this figure. Cost of the machinery exclusive of tax 30 lakhs, exclusive of tax and discount, and the cost of packaging 60,000. Discount is mentioned as 2%. Now question is mentioned that depreciation is charged on plant and machinery at 20% per annum on straight line basis. And also it does not claim depreciation on GST component included in the price of plant and machinery. Fine, we are not definitely, if any GST is recoverable or refundable, or then it does not form part of your cost of the asset. In such a situation, since it does not form part of the asset, no depreciation is charged on that particular value. So here the question what is given is, if we go through question number 2.5. See, 2.5 is basically given from the perspective of GST, where it is mentioned with reference to the information given under para 4, what shall be the value of supply for the machinery supplied by. So we won't be going for value of machine supply, but from perspective of India, we'll be going with question 2.8. Question 2.8 states that, with reference to the information given under para 4, show the statement of profit and loss and balance sheet extract. This is important, extracts in respect of grant received by YPL for the first year under both the methods. This is also important, under both the methods as per Ind AS 20. So the relevant paragraph under which we have to reply the answer is under Ind AS 20. Ind AS 20 belongs to government grants and government assistance. So we'll be talking about Ind AS 20. First of all, for Ind AS 20, let me just brief out what does Ind AS 20 say with respect to the provisions which will be applied here in this particular question. Here grant is given for machinery. So it is a grant which is related to your depreciable asset. For depreciable asset, if a grant is provided, we have two ways of accounting, two accounting treatment per side, optional accounting treatment. Either of the one can be adopted by entity. First option is that either we consider the grant as the whole value of the grant as deferred income and systematically charges to recognize it in profit and loss over the period based on what we are using, the systematic reason base what we are using for the depreciable asset. Second method is we reduce the cost of the asset with the amount of grant. And after reduction, whatever the value comes, after reduction of grant, whatever the value of asset comes, we charge depreciation on that net value. Okay. So there are two ways. First is accounting treatment is given in two ways. First is to recognize the whole amount of grant as deferred income. And second is to reduce the cost of asset. Now, what is the difference between both? See, in both the way, ultimate impact on profit and loss will be same. There will no change in the impact, but the manner of presentation will be different. So that is the reason Ind AS provides both the ways, and either of the way can be used by the entity while doing the accounting with respect to Ind AS 20. Now under this question, if we go through para 4, what we will find is First, we have to find out the value of machinery. The reason for finding the value of machinery is because we have to charge depreciation over it. So first, we have to find out the value of machinery. Value of machinery will be 30 lakhs, which is list price of the machinery less discount, 20% discount. So if 20% discount is there, the machinery value comes to, 2% discount. It is not 20% discount, it is 2% discount. So 30 lakh minus 2% discount, we comes to the value of the machinery cost comes to rupees
2940.
2940. So 2940 is the value of machinery after discount. And then packaging cost is 60,000. So this 60,000 will form part of the cost. Now your cost of the machinery will be considered again 30 lakh rupees. So this 30 lakh rupees is the cost of the machinery, which is to be capitalized in the books as per Ind AS. Ind AS 16. As per Ind AS 16, that is property, plant and equipment, this 30 lakh will be capitalized in your books as cost of the asset, initial value. Okay. Now on this 30 lakh, there are two ways. First is either to that grant which we are receiving of 6 lakh rupees, this 6 lakhs is considered as a deferred income. So in that case, no impact will be on your asset. Your asset will remain as 30 lakh rupees. In second way, we have to, so first let us discuss about 30 lakh. So if 30 lakh is the intact value of the machinery and 20% depreciation is charged on it, so your depreciation amounts comes to rupees 6 lakhs per annum. So this 6 lakhs depreciation is to be charged where? In your P&L. So 20% is charged, 20% of the cost of the asset is charged to P&L. So the grant value which is equal to 6 lakh rupees, 20% will be recognized in P&L on systematic basis based on what the accounting is done for your depreciable asset. So accounting for depreciable asset is 20% is charged to P&L. So 20% of deferred income will be recognized to P&L. So 20% of 6 lakhs arise to 1,20,000. This will be recognized in your P&L. This is credit to P&L. Okay. And it is debit to P&L. So in that case, what will happen? Your P&L account will stand like this. Deferred income is 1,20,000. Depreciation is 6 lakhs. So net impact on, we can say net impact is 4,80,000. What comes to us? Net impact is, this net impact comes to 4,80,000. So under this first method, your grant is in a separate account as deferred income, and a portion of that deferred income, deferred grant income is recognized to P&L, and that systematic basis is based on what is done for your asset, what the amount of depreciation which is taken from the cost of the asset and charged to P&L. Similar on that same systematic basis, your deferred income grant may say you have to take out the portion and recognize it in P&L. This is as per first method. Under second method, what will happen? Under second method, you will be reducing the cost of the asset. So this cost of the asset will be reduced. So when we reduce the cost of the asset, it will become 30 lakh minus 6 lakhs. Shall I just move the page here down so that you can see? So 30 lakh under second method. I am talking about second method. 30 lakh is the initial cost of the asset, which we have already seen how it has been arrived. Then 6 lakhs grant value. This is under second method. The total value of the machinery after reduction of grant is 24 lakhs. Now this 24 lakhs, this 24 lakh will be recognized as cost of the machinery. Out of this cost of machinery, will charge 20% depreciation, and 20% depreciation arise to 4,80,000. This 4,80,000, if you see now, there will not, since there is no deferred grant income, so nothing from the value of grant is going to be recognized in P&L. So no credit on your credit side of the P&L or on the you're in the income part of your P&L. So it will be only expense which will be shown in your statement of P&L in your second method, and on that basis you'll find that only net impact, which is 4,80,000, reduced value of depreciation will be shown in your will appear in your P&L as an expense, depreciation expense. Okay, so this 4,80,000, see, in under first method net impact is 4,80,000, and in the second method only there is a charge of depreciation of 4,80,000. So the value comes to ultimate value is same. Okay, now this is what we have shown in the statement of P&L. Fine. Now, if we see what will happen in your balance sheet. First, let us see the statement of P&L in your answer part, so that you can appreciate how this 4,80,000 has been appeared, is shown in your statement of profit and loss. Okay. If you see here, we'll find under first method, a statement of P&L, depreciation is 6 lakh and government grant credit is 1,20,000. This is the extract. So your net impact is coming as 4,80,000, which is when grant is appearing as a deferred grant income. A separate account has been opened for the value of grant. And in the second method, your depreciation amount, which is appearing in statement of profit and losses, net value, that is 4,80,000. Fine. And now what happens in the balance sheet? In the balance sheet, since asset in under first method, when we have created a deferred grant income account, in that case, asset value was not reduced. So it will appear in your books as 30 lakh less depreciation. So 30 lakh less depreciation of 6 lakh, and your value which will appear in your balance sheet is net figure 24 lakh. And your deferred grant income, which will appear in your balance sheet, will be 6 lakhs means 1,20,000 we have already charged to P&L. This is the value which has been charged to P&L. Okay, so the remaining figure is 4,80,000. Sorry, this is not the value of P&L. 4,80,000 is after reduction of 1,20,000 which has been charged to P&L. Okay, so 4,80,000 will the remaining balance of deferred grant income, which is appearing in your P&L. Now, out of this 4,80,000, we have to see what is the current portion and what is the non-current portion. So, what is the current portion? Current portion is which is going to be recognized in P&L in the coming year, or in the reporting for 12 months from the reporting date. So, if your reporting date is 31st March 2000 of this year, then within 12 months means next 31st March, may whatever amount is going to be recognized in P&L, that will be the current portion, and remaining after reduction of current portion will be the non-current portion. So out of 4,80,000, 120, definitely 20% depreciation is straight line basis. So again 20%. Your deferred portion of grant, 6 lakh ka 20%, that will be recognized next year also. So this 1,20,000 is your current portion, and remaining 4,80,000 minus 1,20,000, this 6 lakh 3,60,000 will be your non-current portion. This will be in the situation of first method, where we are creating a deferred grant income account. Okay. And under second method, since there is no separate account, what will appear in a balance sheet will be the net cost of the asset. Net cost of the asset is 30 lakh minus 6 lakhs grant value, that is 24 lakh, and 24 lakh, 30 lakh is the cost of the asset. As per Ind AS 16, 6 lakh is the grant value. After reducing the grant value, the net value is 24 lakh. This will appear in your balance sheet, less depreciation of the year, and depreciation of year will be 4,80,000. That is the reduced value of the depreciation. Since we have already reduced the value of grant from the cost of the asset, so reduced value of the depreciation will be deducted, and net figure of 19,20,000 will appear in your balance sheet. Okay, so hope this portion is clear to you. Basically the difference is the presentation difference. The manner of presentation will differ. Ultimate effect will be same in both the cases. Okay, let me take some of the one reply. This reply is related to law.
Yes, the student have asked about that sentence, saying that both company law and nominal law portion is there. But however, for IBS, it seems like company law has more weightage. So, dear students, it's a request. It's not nothing like that. That companies have more weightage, but yes, the thing is that company law is very important from the point of view of corporate world. Because this is the law which you are reading at all the levels. If you see, it is forming the part of your syllabus at the foundation, then at the intermediate level, and of course in the self-paced paper also. Considering that set as a mandatory paper, these are covering the important laws which you are being required to acquaint yourself when you are going into the corporate world, or when you are reading any accounts, you just require the knowledge of company law provisions also to certain extent, as well as when you're reading audit, you also require to have the knowledge of the companies act. And besides with that, if you see any of the subject is there, you will find it a company law play a major role. But the other law portions, if you see the security laws, again when it is a case of the listed companies, you need to be acquainted with the SEBI act also that way. So not only the Companies Act, but yes, the security laws and also the other laws covering the IBC code, yes, which is the most prevalent in the burning law in today's scenario, that is also being required, and it is also being necessitated to have the understanding of this particular provision. And FCRA, yes, of course, the one question in this case study is also based on the FCRA. So you cannot neglect that, yes, the economic law is not important. All the law being forming the part of the set day of the syllabus are relevant and important. But yes, under the Companies Act, few topics are more relevant from the aspect of its working with respect of the management or running of the companies. So that way you need to have the understanding. What are all these important things you have to find out? Yes, the first five important chapters, first five chapters of the Companies Act, they are very much important from the IBS perspective. Then security law portions, and moving further to the economic law portion, we'll be seeing that FEMA is important, and FCRA as well as IBC. So you have to focus on all these laws, and because these are the laws which has also, you will be finding there's a connection, there's a linkage of each and every provision. So kindly go through whatever is forming the part of the syllabus, and all the part are important.
In to add on this, Miss Pooja, I just want to add one more thing to what our law faculty has explained. See, for IBS, there is no fixed percentage of any paper or any subject. Question can be, since it is a multidisciplinary case study based paper, so question can be, a case study will be a combine of more than 2 to 3 subjects, will be combination of 2, 3 or 4 subjects in each case study. It is not necessary that each subject has an equal proportion or particular weightage. It may happen that in case study 1 you are having a weightage of say 20% is FR, 20% is your audit, and 30% and 30% is of for other 2 subjects. While in second case study you don't have any weightage for FR, or your weightage of FR is 10% or 5% or 15%. So there's no fixed weightage of any subject in your IBS paper. It depends on the case study, how it is formed and what is the requirement, and how it has been, what portion of different subjects has been involved in that. So don't fix any, generalize something from based on what is given in this case study or in the case study which we are discussing in the current session. Okay.
One more thing is that when you're talking about the company or its working, because most of the IBS case studies are basically talking about the working of the company, some sort of the company's related aspect has been covered. So company means the corporate governance is the basic requirement. And of course, at that point of time, the company law forms or plays the major role. So that way, Companies Act is of course important. But besides the Companies Act, kindly go with the other laws.
Thank you, Shilpa madam.
Thank you students, and all the best. And in case you have any doubt, you can just mail to us. Okay. So I will be at, so at the end we'll be sharing the mail ID also. No? Okay. All the best, students.
Yes, students. Now moving forward in the case study, and now we would be taking up audit part. As you are aware that at the starting point when I was reading the case study in para 2 and 3, in para 2, Yes, students, just 1 minute. बना हुई ना? एक मिनट. This is
This is para 2.
yes, students. CA Kailash Appan, one of the senior partners of the firm, was appointed as the engagement partner. On such audit assignment of YPL, while conducting the audit of YPL, CA Kailash observed that there were certain accounting estimates. Now, accounting estimates, what do you mean by? There are few questions, students. What do you mean by accounting estimates? And made in relation to certain items of financial statements that might give rise to significant risk. Now, what do you mean by significant risk? Significant risk means, students, if you have notebook and pen with you, just write few things because these are very important things. And as I have explained to you the strategy, how you should do the auditing standards, you should at least keep in mind few definitions, say 50 to 50 plus definitions. You should keep in mind, and by keeping in mind, by establishing in your mind those definitions, students, your language will automatically come commanded. Your language would automatically become commanded, and there would be no problem with you writing the examination, in particular relating to auditing. Of course, you would not be having much problem in writing the exam relating to IBS because this is an open book examination. And the only thing is which you require for the purpose of attempting the IBS paper, in particular relating to the auditing, I am talking of the auditing point right away. You must understand what the question is being asked, and you need to go to the relevant para, go to the relevant standard, and find the relevant answer only. The answer which is most appropriate answer, so that it may not happen that the question, whatever the question is asked in the examination, and you are writing different answer which is not the required answer. You are writing the different answer. Of course, even after the examination is, even when the examination is open book examination, and still you are writing the wrong answer. So you have to avoid this thing, that even when the examination is open book examination and you are writing the wrong answer. So students, for this purpose, and the thing which I am explaining to you, the points which I am explaining to you are definitely going to help you out in the auditing paper, which is there at the final examination. Of course, it would not be problem for the IBS. So few things, what I am telling you is the few things which you have to keep in mind, like the few definition, like significant risk. If you must understand what do you mean by significant risk. So significant risk, students, क्या होता है? Significant risk is an identified significant risk. It may be defined as an identified and assessed risk of material misstatement. It is an identified means already determined, and assessed, already it has been determined, risk of material misstatement that in the auditor's judgment that in the auditor's judgment requires special audit consideration. That means determined risk of material, an identified and assessed risk of material misstatement, and identified and assessed. So you need to write a little bit, students, in your notebook. तो आप नोटबुक में थोड़ा बहुत जो मैं आपको नोट डाउन करवाना चाह रहा हूं वो जरूर लिखो स्टूडेंट्स. तो सिग्निफिकेंट रिस्क क्या होता है स्टूडेंट्स? सिग्निफिकेंट रिस्क इज एन आइडेंटिफाइड एंड असेस्ड रिस्क of material misstatement that in the auditor's judgment requires special consideration, might be requiring special audit procedures in addition to audit procedures which are there in SA 330, substantive audit procedures. So might significant risk means an identified and assessed risk of material misstatement. Students, आप, मैं आपको बार बार ये बता रहा हूं कि आप you should be very much you should be very much conversant with the few definitions, means 50 to 100 definitions you should be very much conversant with, because like risk of material misstatement, अब बीच में आ गया risk of material misstatement, identified and assessed risk of material misstatement. आपको पता ही नहीं risk of material misstatement फाइनल लेवल पे क्या होता है. तो स्टूडेंट्स, आप डेफिनेटली यू वुड बी हैविंग प्रॉब्लम इन राइटिंग इन द एग्जामिनेशन. तो रिस्क ऑफ मटेरियल मिसस्टेटमेंट क्या होता है स्टूडेंट्स? रिस्क ऑफ मटेरियल मिसस्टेटमेंट मे बी डिफाइंड एज द रिस्क. इट इज द रिस्क दैट द फाइनेंशियल स्टेटमेंट्स आर मटेरियली मिसस्टेटेड प्रायर टू ऑडिट. इसमें इंपॉर्टेंट वर्ड है स्टूडेंट, प्रायर टू ऑडिट. ये ऑडिट करने से पहले ऑडिटर असेस करता है. तो रिस्क ऑफ मटेरियल मिसस्टेटमेंट may be defined as the risk that the financial statements are materially misstated prior to audit. And now what is significant risk? Significant risk is identified and assessed risk of material misstatement. It is risk of material misstatement that in the auditor's judgment requires special audit consideration. So I hope you have understood the meaning of significant risk. Now, another important thing is accounting estimate. Now, accounting estimate, students, क्या होता है? Accounting estimate, there is SA 540, as I have told you. SA 540, students, this is on auditing accounting estimates, including fair value accounting estimates and related disclosures. Now, what do you mean by accounting estimates? Accounting, as it is what I have told you, कि always follow the linkage method. Auditing में students बहुत अच्छे तरीके से काम करता है लिंकेज मेथड. आप स्लोली करें, आराम से करें और लिंकेज बना के करें. एस्टिमेट के मीनिंग से क्लियर है स्टूडेंट्स, ये अप्रोक्सीमेशन होगा. कोई मीनिंग ही कई बार बहुत कुछ बता देता है. तो सबसे पहले आप मीनिंग को ध्यान से, जो टर्म है उसको एक बार ध्यान से अंडरस्टैंड करें, उसका जनरल मीनिंग देखें कि क्या हो सकता है. तो अकाउंटिंग एस्टिमेट मींस एस्टिमेट विच इज रिलेटेड विद द सब्जेक्ट अकाउंटिंग, मॉनेटरी अमाउंट से रिलेटेड. तो एस्टिमेट इटसेल्फ क्या है? अप्रोक्सीमेशन. तो अगर मैं इसके जेनरिक मीनिंग पे जाता हूं तो इसका मतलब क्या है? एस्टिमेट मींस अप्रोक्सीमेशन. तो डेफिनेशन अगर आप देखेंगे तो यहीं से शुरू होती है. अकाउंटिंग एस्टिमेट्स मींस एन अप्रोक्सीमेशन ऑफ ए मॉनेटरी अमाउंट. अप्रोक्सीमेशन ऑफ ए मॉनेटरी अमाउंट इन द एब्सेंस ऑफ प्रिसाइज मीन्स ऑफ मेजरमेंट, कि मैं उसे एक्यूरेसी से मेजरमेंट नहीं कर पाया, इसलिए मुझे अप्रोक्सीमेशन करना पड़ा. मॉनेटरी अमाउंट, एक मॉनेटरी अमाउंट पे मुझे पहुंचना पड़ा क्योंकि मैं उसे प्रिसाइजली मेजर नहीं कर पाया, बिकॉज आई वॉज अनएबल टू डू इट, टू मेजर इट प्रिसाइजली. तो some financial statements, students, please understand that some financial statement items items which are appearing in the financial statements means assertions, you can say. Some financial statement items cannot be measured precisely. Please understand this. Like provision for bad debts. Like provision, for example, provision for bad debts. या fair value accounting estimates. Revaluation model जैसे कि आपने पढ़ा है, PP India 16. Like और एग्जांपल्स मैं देता हूं, वारंटी ऑब्लिगेशंस मैं उसे प्रिसाइजली मेजर नहीं कर पाता. प्रोविजन फॉर डाउटफुल डेट्स, असेट की यूजफुल लाइफ मैं प्रिसाइजली मेजर नहीं कर पाता स्टूडेंट. डेप्रिसिएशन मेथड, प्रोविजन अगेंस्ट द कैरिंग अमाउंट ऑफ इन्वेस्टमेंट वेयर देयर इज अनसर्टेनिटी रिगार्डिंग इट्स रिकवरेबिलिटी. सो ये कुछ एग्जांपल्स मैंने आपको दिए, बताए. इन्वेंट्री ऑब्सोलिसेंस कि कितनी इन्वेंट्री मेरी ऑब्सोलीट है, कई बार मैं उसका प्रिसाइज मेजरमेंट नहीं कर पाता अमाउंट का. तो अकाउंटिंग एस्टिमेट स्टूडेंट्स क्या हुआ? इट इज एन अकाउंटिंग एस्टिमेट क्या है स्टूडेंट? एंड इट इज एन अप्रोक्सीमेशन. इट इज एन अप्रोक्सीमेशन. तो सबसे पहला इसमें स्टूडेंट्स आपको क्या ध्यान रखना है कि ये अप्रोक्सीमेशन है. इट इज एन अप्रोक्सीमेशन. ये मैं आपको अकाउंटिंग एस्टिमेट का मीनिंग डेफिनेशन बता रहा हूं. अप्रोक्सीमेशन ऑफ ए मॉनेटरी अमाउंट, ऑफ ए मॉनेटरी अमाउंट इन द, बहुत सिंपल डेफिनेशन अगर आप देखेंगे, इन द एब्सेंस ऑफ ए प्रिसाइज मीन्स ऑफ मेजरमेंट. इन द एब्सेंस ऑफ, कि मैं अप्रोक्सीमेशन मुझे करना कब पड़े. देखो लिंकेज मेथड से अगर आप करोगे ना तो बहुत जल्दी आपके माइंड में सेटल हो जाएगी डेफिनेशन. अप्रोक्सीमेशन स्टूडेंट्स मुझे करना कब पड़े, व्हेन आई विल, व्हेन देयर वुड बी नीड फॉर अप्रोक्सीमेशन, when I am unable to measure it precisely. When I am unable to measure something precisely, then I have to do the approximation. So यही definition में लिखा हुआ है. The approximation of a monetary amount in the absence of precise, in the absence of precise, SE आएगा यहाँ पे, precise means of measurement, means of measurement. तो ये आप डेफिनेशन है अकाउंटिंग एस्टीमेट की. तो इसमें दो टर्म्स थे स्टूडेंट्स, अकाउंटिंग एस्टीमेट और सिग्निफिकेंट रिस्क, दोनों के मैंने आपको मीनिंग क्लियर कर दिए. नाउ सी व्हाट द क्वेश्चन इज आस्किंग अबाउट. नाउ आई एम गोइंग टू द क्वेश्चन पार्ट. क्वेश्चन पार्ट पार्ट कहाँ पे हुआ निशा मैडम?
हाँ.
Yes, sir. Which question, sir?
2.6.
Yes, sir. It's here.
With reference to accounting estimates given under para 2 that might give rise to significant risks, what Mr. Kailash should have evaluated in addition to performing procedures as per SA 330. तो क्या इवेल्युएट करें? देखो सिग्निफिकेंट रिस्क का मैंने आपको मीनिंग डिटेल में समझाया, दोबारा बता देता हूं. आइडेंटिफाइड एंड असेस्ड रिस्क ऑफ मटेरियल मिसस्टेटमेंट that in the auditor's judgment requires special audit considerations. मीन्स SA 330 के मैंने प्रोसीजर्स लगा दिए substantive audit procedures as explained in SC 330, मैंने टेस्ट ऑफ डिटेल लगा दिया। लेकिन स्टूडेंट्स एडिशनल कंसिडरेशंस मुझे क्या, बिकॉज सिग्निफिकेंट रिस्क इज देयर, अमाउंट मतलब स्टेक्स बड़े हाई हैं, अमाउंट ज्यादा है, से 100-200 करोड़ अमाउंट है, तो आपको क्या करना पड़ेगा, आपको एडिशनल ऑडिट प्रोसीजर लगाने पड़ेंगे रिस्क कवरेज के लिए। तो आई होप एवरीबॉडी हैज अंडरस्टूड द क्वेश्चन। नाउ कमिंग टू द आंसर पार्ट स्टूडेंट्स, कमिंग टू द आंसर पार्ट विद रेफरेंस, मैं दोबारा एक बार आपको क्वेश्चन समझाया, विद रेफरेंस टू द अकाउंटिंग एस्टिमेट्स that might give to significant risk, give rise to significant, what Mr. Keda should, in addition to SA 330 procedures, वो कौन से एक्स्ट्रा प्रोसीजर, स्पेशल कंसिडरेशंस क्या होंगे ऑडिटर के? तो नाउ आई एम मूविंग टू आंसर पार्ट। यस, एज पर SA 540, auditing accounting estimates including fair value accounting estimates and related disclosures for accounting estimates that give rise to significant risks। तो सिग्निफिकेंट रिस्क क्या हुआ स्टूडेंट्स, जहां पे ऑडिटर को स्पेशल ऑडिट कंसिडरेशंस की जरूरत पड़ती है। तो दिस इज आइडेंटिफाइड एंड असेस्ड रिस्क ऑफ मटेरियल मिसस्टेटमेंट्स। सिग्निफिकेंट रिस्क क्या होता है? आइडेंटिफाइड एंड असेस्ड रिस्क ऑफ मटेरियल मिसस्टेटमेंट। और रिस्क ऑफ मटेरियल मिसस्टेटमेंट स्टूडेंट क्या होता है? रिस्क दैट द फाइनेंशियल स्टेटमेंट्स आर मटेरियली मिसस्टेटेड प्रायर टू ऑडिट, ये रिस्क ऑफ मटेरियल मिसस्टेटमेंट होता है। तो एन आइडेंटिफाइड एंड असेस, सिग्निफिकेंट रिस्क क्या होता है स्टूडेंट? आइडेंटिफाइड एंड असेस्ड रिस्क ऑफ मटेरियल मिसस्टेटमेंट दैट इन द ऑडिटर्स जजमेंट रिक्वायर्स स्पेशल ऑडिट कंसिडरेशन इन एडिशन टू, देखो स्पेशल कंसिडरेशन इन एडिशन टू अदर सब्सटेंटिव प्रोसीजर्स परफॉर्म टू, तो इन एडिशन ही वो प्रोसीजर्स लगा रहा है, ऑडिट प्रोसीजर्स। द ऑडिटर शैल इवेल्युएट द फॉलोइंग, हाउ मैनेजमेंट हैज कंसीडर्ड अल्टरनेटिव assumptions, अब बिकॉज स्टेक स्टूडेंट्स आई हैं, तो कहते हैं हाउ मैनेजमेंट हैज कंसीडर्ड अल्टरनेटिव assumptions और आउटकम्स एंड व्हाई इट हैज रिजेक्टेड देम। मैनेजमेंट ने क्यों, इसके लिए स्टूडेंट्स आप कैसे करोगे, हाउ मैनेजमेंट है, ऑडिटर क्या करेगा, इसमें डिटेल्ड गाइडेंस स्टूडेंट्स ये हुई। तो जैसे फॉर एग्जांपल इसमें सेंसिटिविटी एनालिसिस ऑडिटर लगा सकता, देख सकता है, सेंसिटिविटी एनालिसिस कर सकता है। तो सेंसिटिविटी एनालिसिस स्टूडेंट्स क्या होता है, कैसे चेक करेगा ऑडिटर? हाउ द मैनेजमेंट हैज कंसीडर्ड अल्टरनेटिव assumptions, तो मैनेजमेंट में इवेलुएट अल्टरनेटिव assumptions। तो बिकॉज मैनेजमेंट, अब ऑडिटर ये चेक करना चाह रहा है स्टूडेंट्स, हाउ मैनेजमेंट हैज कंसीडर्ड अल्टरनेटिव assumptions और आउटकम्स एंड व्हाई इट हैज रिजेक्टेड देम, और हाउ मैनेजमेंट हैज अदरवाइज एड्रेस्ड एस्टिमेशन अनसर्टेनिटी इन मेकिंग द अकाउंटिंग एस्टिमेट। अब एस्टिमेशन अनसर्टेनिटी क्या होती है, ये भी एसए ने डिफाइन किया स्टूडेंट, बहुत इंपॉर्टेंट टर्म है स्टूडेंट इस एसए के लिए कि एस्टिमेशन अनसर्टेनिटी क्या होती है। एस्टिमेशन अनसर्टेनिटी, द ससेप्टेबिलिटी ऑफ एन अकाउंटिंग एस्टिमेट। ससेप्टेबिलिटी स्टूडेंट्स क्या होता है? लाइकली टू बी अफेक्टेड। एस्टिमेशन अनसर्टेनिटी स्टूडेंट्स क्या होती है? दिस इज ससेप्टेबिलिटी of an accounting estimate, of an accounting, ये मैं एस्टिमेशन अनसर्टेनिटी को डिफाइन कर रहा हूं, ससेप्टिबिलिटी ऑफ एन अकाउंटिंग एस्टिमेट एंड रिलेटेड डिस्क्लोजर्स, एंड रिलेटेड डिस्क्लोजर्स, एंड रिलेटेड डिस्क्लोजर्स टू एन, टू एन inherent lack of precision, inherent lack of precision, इनहेरेंट ही है इसमें लैक ऑफ प्रिसीजन, मतलब मैं उसे एक्यूरेटली मेजर कर ही नहीं पाऊंगा। इनहेरेंट लैक ऑफ प्रिसीजन इन इट्स मेजरमेंट। तो एस्टिमेशन अनसर्टेनिटी अगेन स्टूडेंट्स हाई भी हो सकती है और लो भी हो सकती है। तो इट इज लाइकली टू बी इफेक्टेड, susceptibility means probability sort of thing, likely to be affected of an accounting estimate and related disclosure. This is in respect of accounting estimate and related disclosure to inherent lack of precision, to inherent lack of precision in its measurement. ये estimation uncertainty। तो estimation, इसके नाम से अगर आप जाओगे तो एस्टिमेशन तो अप्रोक्सीमेशन ही होता है, और अनसर्टेन मीन इट इज नॉट सर्टेन कि कितना होगा, तो अनसर्टेन है, मतलब उसमें प्रिसीजन नहीं, इनहेरेंटली लैकिंग है वो प्रिसीजन, प्रिसीजन इज इनहेरेंटली लैकिंग इन दैट, तो दैट इज एस्टिमेशन अनसर्टेनिटी। तो ऑडिटर को तो स्टूडेंट्स अगर तो हाई एस्टिमेशन अनसर्टेनिटी हाई है तो साथ में डिस्क्लोजर भी देगा नीचे नोट्स ऑन अकाउंट, ये चेक करेगा कि क्या डिस्क्लोजर भी देना है। और ऑडिटर स्टूडेंट्स बहुत इंपॉर्टेंट है, अगर हाई है तो डिस्क्लोज भी होगी, और लो है तो फिर डिस्क्लोजर नहीं होता। तो एस्टिमेशन अनसर्टेनिटी हाई लो कब होती है, स्टैंडर्ड ने एग्जांपल्स के साथ स्टैंडर्ड के अंदर एक्सप्लेन्ड है कि किन किन कहां पे एस्टिमेशन, किन किन केसेस में एस्टिमेशन अनसर्टेनिटी हाई है और किन किन केसेस में एस्टिमेशन अनसर्टेनिटी लो होती है। फॉर एग्जांपल मैं आपको बताता हूं स्टूडेंट्स, some accounting estimates involve low estimation uncertainty। जहां पे सिचुएशन बड़े आसान है, ये भी अगर आप इसको एक बार देखोगे, जहां पे बिजनेस एक्टिविटी कंप्लेक्स नहीं है, अकाउंटिंग एस्टिमेट्स अराइजिंग इन एंटिटीज दैट एंगेज इन बिजनेस एक्टिविटीज जहां पे दैट आर नॉट वेरी कंप्लेक्स, और अकाउंटिंग एस्टिमेट्स जहां पे फ्रीक्वेंटली किए जाते हैं वहां पे क्या होगा, एस्टिमेशन अनसर्टेनिटी कम होगी। और ज्यादा कब होगी स्टूडेंट्स, अकाउंटिंग एस्टिमेटरी एस्टिमेशन अनसर्टेनिटी हाई कब होगी, फॉर सम अकाउंटिंग एस्टिमेट्स देयर मे बी रिलेटिवली हाई एस्टिमेशन अनसर्टेनिटी। कब, अकाउंटिंग एस्टिमेट्स रिलेटिंग टू एन आउटकम ऑफ लिटिगेशन। लिटिगेशन में स्टूडेंट्स आउटकम ऑफ लिटिगेशन क्या होगा, तो वहां पे एक एस्टिमेशन अनसर्टेनिटी, कई बार मैं सोच रहा हूं कि मुझे करोड़ रुपया देना पड़ेगा, लेकिन हो सकता है मुझे 1.5 करोड़ देना पड़ जाए, 2 करोड़ देना पड़ जाए। तो यहाँ पे आउटकम ऑफ, इन केस ऑफ आउटकम ऑफ लिटिगेशन इज देयर, तो एस्टिमेशन अनसर्टेनिटी हाई हो जाती है। एंड फॉर फेयर वैल्यू अकाउंटिंग एस्टिमेट फॉर डेरिवेटिव फाइनेंशियल इंस्ट्रूमेंट्स विच आर नॉट पब्लिकली ट्रेडेड, पब्लिकली जो स्टॉक एक्सचेंज मार्केट में ट्रेडेड ही नहीं है जो आइटम्स, तो वहां पे एस्टिमेशन अनसर्टेनिटी हाई हो सकती है। तो ये कुछ बातें हैं स्टूडेंट्स जो आपको अच्छी तरह से समझनी है। तो मैंने आपको पहला पॉइंट बताया कि हाउ मैनेजमेंट हैज कंसीडर्ड अल्टरनेटिव assumptions, तो इसके लिए आप सेंसिटिविटी एनालिसिस देखेंगे, मैनेजमेंट की डिटेल्ड वर्किंग देखेंगे कि कैसे मैनेजमेंट ने किया है, कितने अल्टरनेटिव मैनेजमेंट ने, उसकी पूरी डॉक्यूमेंटेशन स्टूडेंट्स आप देखेंगे मैनेजमेंट की। और हाउ मैनेजमेंट हैज अदरवाइज एड्रेस्ड एस्टिमेशन अनसर्टेनिटी जो थी हाई लो, वो मैनेजमेंट ने उसे कैसे एड्रेस किया है इन मेकिंग द अकाउंटिंग एस्टिमेट। तो दिस इज अबाउट फर्स्ट पॉइंट। सेकंड पॉइंट स्टूडेंट्स क्या कह रहा है कि वेदर सिग्निफिकेंट assumptions used by the management are रीजनेबल, रीजनेबल। तो ऑडिटर को तो स्टूडेंट्स ये देखना है कि जो मैनेजमेंट ने assumptions लिए थे अकाउंटिंग एस्टिमेट और अकाउंटिंग एस्टिमेट भी स्टूडेंट्स क्या था, दैट गिव राइज टू सिग्निफिकेंट रिस्क था उसके अंदर। तो वो देखेगा कि जो सिग्निफिकेंट assumptions थे वो रीजनेबल थे या नहीं थे, or where relevant to the reasonableness of the significant assumptions used by the management, management's intent to carry out specific course of action। क्या मैनेजमेंट की इंटेंशन टू कैरी आउट द स्पेसिफिक कोर्स ऑफ एक्शन एंड इट्स एबिलिटी टू डू सो, और क्या उसकी एबिलिटी भी है या नहीं है। मैनेजमेंट की इंटेंशन कैसे देखेगा स्टूडेंट्स ऑडिटर, इसके लिए प्रीवियस हिस्ट्री देखनी पड़ती है स्टूडेंट्स। मैनेजमेंट का इतिहास देखना पड़ता है कि मैनेजमेंट ने आज दिन तक कैसे इंटेग्रिटी से काम किया है, या मैनेजमेंट खाली धोखा ही देती रही है, खाली झूठी बातें ही करती रही है। तो इसके लिए हिस्ट्री बड़ी इंपॉर्टेंट होती है। क्या मैनेजमेंट ने जो कमिटमेंट्स किए हैं क्या वो पूरे करती है? फॉर एग्जाम्पल बोनस ही है, बोनस, डिफरेंट वेरियस टाइप्स ऑफ बोनसेस, क्या गवर्नमेंट जो मैनेजमेंट ने अनाउंस किया आज दिन तक क्या उनको पे भी करती है? क्या मैनेजमेंट ने जो कमिटमेंट्स गवर्नमेंट के साथ किए हैं क्या उनको कंप्लाई विद कर रही है? सो गवर्नमेंट ने अगर मान लिया जाए कोई एक 10 साल गोइंग फॉरवर्ड 10 ईयर्स कोई कमिटमेंट की थी, या 5 ईयर्स गोइंग फॉरवर्ड कमिटमेंट की थी, क्या गवर्नमेंट ने उनको पास्ट में कंप्लाई विद किया है? यहां से मैनेजमेंट की इंटेंशंस पता लगती हैं। सो ये आपको जो उसके कंपनी के मैनुअल्स हैं, अकाउंटिंग मैनुअल्स हैं, वहां से आपको सारी बातें, एनुअल इंफॉर्मेशन रिपोर्ट, वहां से सारी बातें पता लगती हैं। गवर्नमेंट की सोसाइटी के लिए कमिटमेंट्स क्या है, गवर्नमेंट सीएस एक्टिविटीज के लिए कितना स्पेंड कर रही है, यहां से इंटेंशंस आपको पता लगेंगी। एंड इट्स एबिलिटी टू डू सो, गवर्नमेंट उसकी कंपनी की एबिलिटी टू डू सो, कि क्या उसके पास कैश रिजर्व हैं, क्या उस कंपनी जो है उसके पास प्रॉफिट्स इनफ है, उसकी एबिलिटी भी है या नहीं, तो उसकी फाइनेंशियल पोजीशन कैसी है, असेट्स की पोजीशन कैसी है, लाइबिलिटीज बहुत ज्यादा तो नहीं है। तो ये सारी बातें हैं स्टूडेंट्स विच आर वेरी इंपॉर्टेंट। तो ये सारे 3 पॉइंट्स इसमें क्वेश्चन पूरा एस्से के लास्ट में अगर आप पहुंचोगे, पूरा एस्से अगर आपने अच्छी तरीके से जो टर्मिनोलॉजी है एस्से की स्टूडेंट्स, if you are clear with the terminology only then you will be able to understand the question and reply accordingly। तो ऑडिटिंग में भी आपको ये क्वेश्चन पूछा जा सकता है। तो इस तरह से क्वेश्चन, ये बहुत अच्छा क्वेश्चन है स्टूडेंट्स। तो आप इसको करना कि ऑडिटिंग में भी इवन मैं आपको कह रहा हूँ कि पूछा जा सकता है। तो बहुत अच्छा क्वेश्चन है। यस। तो मैंने आपको तीनों पॉइंट स्टूडेंट्स एक्सप्लेन कर दिए। नाउ वी मूव टू द नेक्स्ट क्वेश्चन।
Yes, sir.
निशा मैडम आप एक्सप्लेन
Yes,
करें
sir.
नेक्स्ट वन? ठीक है, ओके।
Now let's move to the next MCQ. After that, MCQ number 2.3.
तो एनी डाउट इन दिस क्वेश्चन स्टूडेंट्स? जो ऑडिटिंग का क्वेश्चन है, जो आपके ऑडिटिंग के रिलेटेड अगर कोई डाउट्स हैं तो आप पूछ सकते हैं। आर देयर एनी क्वेरीज निशा मैडम?
No, sir. Students, kindly make this session interactive in the sense, come out with your queries and issues, whatever you are facing and understanding while of this IBCs. Of course, there are many issues that you can discuss over here, which you are while facing while reading and studying of your subject also. So you can just ask so that you'll be benefited out of this session, because this is one of our main aspect of conducting these classes, that yes, the students gain the knowledge and the benefit. So now moving to the next MCQ part. Yes, I'm just taking over here MCQ number 2.4. Yes, as the student Pooja's earlier asked whether only the Companies Act is relevant. No, just considering this point over here only, that this is the question 2.4 is based on the FCRA. This is being covered under the economic law portion. So yes, the FCRA, the Foreign Contract Regulation Act, it is one of the most, you can say it is kind of an important act with respect to the foreign regulation of the foreign contribution, how the foreign contribution or the foreign, that hospitality or the services is being regulated by the law in India through when it is being received by any person or association or a company. So there they require to obtain a certificate of registration. This is one of the important requirement for obtaining the foreign contribution, so that the proper that fund that has been acquired with for a particular purpose can be utilized. But there is a condition, suppose that the time period for which this registration certificate has been issued is expired, is about to be expired. Then what is the next thing? If it is about to be expired, of course, the next important thing is that the renewal. You can get renewal of such certificate or you can freshly apply for the same. So looking at this provision only, the question number 2.4. Yes, the question asks, with reference to the information given in the para 3, till what time period SKT had to make an application for renewal of its certificate so that it might be accepted, and the application should have been accompanied with what amount of fees. Simply, you can, by looking at the question, you will be just finding out it is asking with respect to the renewal of the certificate. And what is asking? What time period is required to make an application? This is the requirement in the question. So before attempting any MCQ, it's requested, dear students, that read the question properly so that you are able to understand what is the requirement. To just reading the question, you will be finding that it is asking at what time is required. What is the time period within which an application may be made for renewal of the certificate? This is the requirement. Again, there's another question within the MCQ itself, that the application should be accompanied by what amount of fees. So read the question completely. This is again the another requirement. So two questions are lying within itself. First with respect to the time period, and second with respect to the amount of fees. So if you see what would be the relevant provision which is being dealt with respect to the renewal of the certificate. Dear friends, this is the relevant section, section 16. It should be read with Rule 12 of FCRA Rules 2011. So you need to have understanding of section, because section 16, which talks about the renewal of the certificate, whereas what is the procedure to be complied with for the renewal part is being given under the Rule 12. So you need to read both the things together to come out with the complete understanding of the legal requirement for renewal part. Okay, now what section 16 says about? Section 16 says about that every person who had been granted a certificate. So generally here what happens, the person who applies for the registration, they get the registration under section 12 of FCRA. Right? So now every person who has been granted a certificate under section 12, now they have to get such certificate and certificate to be renewed. If suppose that certificate is about to be expired, so such certificate needs to be renewed within, as per the provision, within 6 months before the expiry of the period of the certificate. This is the first requirement. Second requirement, that before renewing the certificate, the central government has to satisfy that it has fulfilled all the conditions. It inquires, and if it deems fit that all the requirements are fulfilled, then only the central government will renew the certificate, right? And this application is to be renewed within 90 days, and it should be accompanied by such fees as has been prescribed under the Act. And this should be done within 90 days from the date of receipt of application. And the grant of certificate for the renewal will be for a period of 5 years. It may also be possible that central government does not renew the certificate within the provided period of 90 days. It may be possible that central government does not renew the certificate within this provided period of 90 days. Then in that case, it will communicate the reasonable ground for the same. Or there may be another condition that central government may refuse to renew the certificate. They may refuse to renew the certificate. In that case, it is only when the person has violated any of the provision of the Act. So there are basically two things. First, this section talks about the time period. Okay, within what time they have to apply for the renewal. Then the central government will inquire whether it is complying with the legal requirements under section 12 subsection 4. Then it will see that whether they have been made in a prescribed form and the manner along with the prescribed fees. Then they will pass such a renewal order of the certificate. Yes, the certificate is renewed, and they will issue the renewed certificate within the 90 days. And suppose if they does not renew the certificate within the 90 days, they will give the proper justification. Okay, and if they feel like there is a non-compliance of any provision of the Act or rules, in that case, they will refuse to renew the certificate. Okay, this is the important aspect under the section 16. Then moving to the other important thing, that any person who is making an application for renewal shall have an FCRA account. So what happens, that certificate is issued renewal, it should be a period of 5 years from the date of grant of registration, and when it expires will not be eligible to receive for foreign contribution. That means what will happen if suppose the certificate of registration ceases to exist? What will be the consequences? The consequences will be that the organization will neither receive the fresh foreign contribution nor can utilize whatever the contribution is lying in his hand until the certificate is renewed. So you should know what will be the consequence if suppose that registration is not renewed. So there are two consequences. First, that will not receive any fresh contribution, and second thing, neither can utilize any contribution which is lying in their hands. So this will be the case also lying the same in the situation where the application for registration could not be filed. For any of the reason it could not be filed, then also the same consequences will be lying. And suppose if the application of renewal is not accompanied with the requisite fee and the process has not been further, you can take it has been moved ahead. In that case also, the same consequences will be there. And if the application for renewal is in the process, in that case also the consequences will remain the same. So in that case, what happens if suppose the renewal is not made before the expiry of the certificate, or if the application is made but not accompanied with the requisite fees, that in such case, whatever the asset is lying in the account, FCRA account, being unutilized, that shall vest within the prescribed authority under the Act until the certificate is renewed or the fresh registration is granted by the central government. Okay, this is the procedure. And what is the procedure for the renewal? You have to simply go to the homepage of the Ministry of the Home Affairs website. There you have to log in account by login ID password, inserting the login ID password. Then you have to fill the electronic form FC3C, which deals with the application of renewal of FCRA registration. Then you need to upload all the requisite documents for the registrations being required, and also have to pay the prescribed fees of rupees 5,000 and get the printout of such an application. So this is the procedure for renewal. And what happens suppose if there is a delayed application for renewal? Because the question can be asked in either of the ways. Either they are asking with respect to the filing of application for renewals, or suppose if there is a delay in the filing of the renewal application, then what will be the consequences? So it says that if a person fails to apply for renewal within the due date, then the registration shall become invalid. So please remember, if there's a delay in applying for the renewal, then of course that registration will become invalid. However, in the case of, department may condone the delay also if satisfactory reasons are there for not submitting for the renewal application. So that can be possible. Or delayed application for renewal can be filed up to 1 year from the date of expiry of FCRA certificate. Please remember, for delayed filing of application for renewal, they can be filed up to 1 year from the date of expiry of the FCRA certificate. So there's a difference. In the case of delayed application, there a time period is, it can be filed up to 1 year from the date of expiry of the FCRA certificate. But whereas with respect to renewal, from the date of this expiry of the certificate, the law says about that it should be made within 6 months before the date of expiry. So there's a difference, and you should be very much clear which and when the situation needs to be applied in the requirement. Whatever the question is being asked, read properly so that you can make it out what is exactly being asked and what sense and which part of the legal provisions will be applied over there. So that way, this was the provision related to the renewal part. Now let's see the question. Question is asking about at what time an application for renewal of a certificate can be made and what amount of fees is to be paid. If you see the option number first, it says that such applications need to be made within 3 months before the date of expiry, and the total fees payable shall be rupees 5,000. Already explained you the legal provision in very much detail. So I hope you must be very much clear what shall be the answer over here. But then also I'm just reading the option over here. The first option is altogether wrong because already said that application shall be made for renewal within 3 months before the date of expiry. Within 6 months before the date of expiry, and on the option it is given 3 months. So it is altogether wrong. Now moving to the second option, it says that such application needs to be made within 6 months before the date of expiry, and that too the fees payable on such application is rupees 5,000. Yes, it seems to be approved, right answer as per in requirement with the law that I've already explained to you. Now let's also go to the option C and D. Option C says such application needs to be made by 31st March 2023 and the total fees payable on such application shall be rupees 1,500. So you can make out that law prescribes the fees levied should be 5,000. So you're just looking at this part as well as with the requirement of within 6 months is also not being complied over here. It is showing simply the end of the financial year. So that way, this option also seems to be wrong. Now moving to the option D, such application needs to be made by 20th December 2024 and total fees payable shall be rupees 6,500. This also seems to be absolutely wrong with respect to the payment of fees as well as the date given over here. Because the law simply specifies that it should be made within 6 months. So this is being complied with before the date of expiry. So this has been fulfilled. Further, the requisite of payment of fee of rupees 5,000 again met with, and that is why option B is absolutely right and correct over here. So that way, this is the question pertaining to the renewal of the certificate which dealt with the FCAI. So please, student, focus on other part of the laws also being forming the part of the syllabus of the set A. Now moving to the next question.
Yes, students. Thank you, Nisha madam.
Thank you, sir.
Thank you for your contribution. Yes, students. Now with us, Madam Shefali Jain, who is a faculty in direct taxes. So she would be taking you through GST part, which is there in the case study. Yes, over to you, Shefali madam.
Good afternoon, everyone. As sir apprised you that I am a faculty for indirect taxes at Board of Studies. So in this case study, I would be taking GST related portion. First of all, I will explain the concept which is related to the question which we will be discussing, and thereafter we'll discuss the question and its answer. So first question regarding GST is yes, MCQ number 2.3. So it says with reference to the information given in para 2, how much balance in electronic credit ledger would be available with YPL after discharging its GST liability for May month, for which Mr. Kailash was consulted. You have already discussed the entire case study with all the with sir and other faculties. So you are very much thorough with the case study. We
Yes.
straight away, yes, sir. So we are straight away going to para 2 and the relevant portion for this, for our answer. So the relevant portion is this portion. That is the last para, because this is what is concerned about ITC. Apart from conducting the audit assignment, Mr. Kailash also used to solve the concerns raised by the accountant of YPL with respect to GST and income tax matters. One such concern raised by the accountant to him was with respect to ITC availment under GST, which is briefed as under. Now, before going through the information which is given in the case study, we'll first of all go through the ITC availment provisions. The provisions relating to or the conditions for availment of ITC, because we should know that under what conditions we can avail ITC, a buyer can avail ITC. First of all, you should know the nature of transaction. A supplier is supplying a goods or services to a recipient, and on that supply, it is charging GST. So recipient is whether recipient is eligible to take ITC on that particular supply of goods or services received by him or not, that is provided by the provisions contained under chapter ITC of CGST Act, read with the relevant rules under CGST rules. First section in this chapter is section 16. That forms the basic premise for taking ITC under GST law. Now we'll go through the basic provisions of section 16 along with rule 36. So the conditions for taking ITC are contained under section 16, read with rule 36. Section 16 provides that every registered person is eligible to take ITC of the GST paid on the inward supplies received by it, provided such supplies are or such goods or services are intended, either they are used in course or furtherance of business, or they are intended to be used in course or furtherance of business. In that case, he will be eligible to take ITC of that GST paid on the inward or that input tax charged on the goods or services received by it. But the condition is that those goods or services should have been used in course or furtherance of business, or they are intended to be used in course or furtherance of business. Now, further business, you know that there is a specific definition for business under GST law, which provides that sometimes even if a transaction is undertaken only once a year or only once during the lifetime of the business, then also it can be termed as business. Basic condition is that it should be either for any trade, profession. It can be for monetary purpose or not. Then we include in it the services provided by a club to its members. So the definition is very exhaustive in itself, and this provides that what a business constitutes. So you can refer that definition to understand what do you mean by a business. In course of business, if any services are received, any goods are received, or for furtherance. Furtherance is for the advancement, improvement of the business. If we are receiving any goods or services, they shall be eligible for taking ITC by the recipient. Now, subsection 2 of section 16 provides certain conditions which have to be fulfilled by the recipient for taking ITC. What are these conditions? First of all, the registered person or the recipient. I will call registered person as recipient to make it clear to you that recipient has to take ITC on the goods or services received by it. So first of all, he should be in possession of the tax paying document. That means it can be a tax invoice, it can be a debit note, then a bill of entry can also be there. It can be a revised tax invoice. Or ISD invoice can also be there. So if he is in possession of the document which validates or which proves that he has actually paid tax on his inward supplies, then first condition is satisfied. He can take ITC subject to other conditions being fulfilled. So first condition is he is in possession of a tax paying document, which is tax invoice, debit note, bill of entry, revised invoice, then ISD invoice, and so on. So any document which proves that yes, he has paid ITC on his inward supplies will suffice. Second condition is the details of the invoice or debit note in respect of which he is claiming ITC, in respect of which he has to avail ITC, has been furnished by the supplier in his statement of outward supplies for the month. Statement of outward supplies is GSTR1, or in case he is a QRMP supplier who has availed a quarterly return. So generally GSTR1 is filed monthly, but in case of a QRMP, quarterly return monthly payment supplier who has opted for QRMP scheme, any supplier who has opted for QRMP scheme, he is required to file his GSTR1 once in a quarter. In earlier 2 months, so in first 2 months, what he can do is he can use the invoice furnish facility for furnishing his outward supplies so that these recipients can take the credit. So in that case, he will be furnishing GSTR1 only once a quarter. In first 2 months of the quarter, he will be using the invoice furnishing facility to furnish his details of outward supplies. On the basis of that, recipient can take credit. So this is the second condition, that his supplier must have shown these supplies in his GSTR1. Plus, there is one more condition attached in this clause itself, that these supplies have been correspondingly reflected in the GSTR to be of the recipient. So on supplier part, what he has to do, he has to show these supplies in his GSTR1. He has to furnish these outward supplies in his GSTR1 or invoice furnish facility if he is a QRMP supplier. And the corresponding details of this invoice is reflected in GSTR 2B of the recipient. So invoice must have been furnished by the supplier. This is the second condition. And third, so this is very important condition, in fact, because whenever we have to see, you will find this condition being applied in many questions, where you will find that maybe the purchases for a recipient, for a buyer, are quite a number of purchases he has made in a month, but only some of those purchases have been recorded or have been furnished by his supplier in his GSTR1. So those invoices or debit notes which have not been furnished by the supplier in his GSTR1 for a particular month, then the recipient will not be able to avail credit with respect to those invoices. And it should be duly reflected in GSTR 2B also. So this is a system generated arrangement that once a supplier furnishes GSTR1 and details of invoices in GSTR1 for a particular recipient, then recipient will get these details reflected in his GSTR 2B, that yes, the supplier has all his suppliers who have furnished the details of the receipts which he has received in a particular month. His suppliers has furnished in their GSTR1, and he gets this listed in his GSTR 2B, that yes, this is the ITC which is available to him or which is not available to him. We'll see it during the course of our discussion today. Then third clause BA, it says details of ITC of the said supply communicated to such person under section 38 has not been restricted. Now section 38, it communicates to a recipient or to a registered person in GSTR 2B that what is the details of the inward supplies in respect of which ITC is available to that recipient, and the details of the inward supplies on which credit cannot be availed by such recipient. So first part on which we said details on which recipient can take ITC, they are very clear that recipient will straight away see those details, those amounts, and he will take ITC on the same. But it has certain amounts which are though reflected in GSTR 2B, but it has been specifically mentioned that he will not be able to take credit in respect of those amounts. So this is one of the condition in section 16, that if any purchase which a recipient has made and it is restricted under section 38 that he cannot take ITC on that particular purchase, even though it is reflected in his GSTR 2B, then that recipient will not be able to take credit on the same. Now, what are those supplies, details of which is there in GSTR 2B, but still ITC on the same is not available as per section 38? We'll quickly go through them. First is that any new registrant, any person who has taken a registration recently, there will be now this will be specifically notified, or this period will be prescribed through rules which has not yet been done, but section 38 provides that a new registrant, a person who has recently taken registration under GST, will not be able to take ITC till the time his registration is new for a specified period. Now that period has not yet been specified. So by any registered person within such period of taking registration as may be prescribed. So when a person takes registration till a particular period, he will not be allowed to take avail ITC, but that provision has not yet been prescribed. Second is if he has made any default in payment of tax. So that if a person has made a default in payment of tax, this tax is output tax. So if he has made any default in payment of output tax, he will not be able to take ITC. Again, this provision has not been made effective, but I am taking you through the provisions of section 38 so that you know that yes, this can be made effective in future. So who has defaulted in payment of tax and this default continues for a specified period, then he will not be able to take ITC also. So if this is to ensure that he makes payment of tax on time. He makes his output tax. He makes the payment of output tax on time. If he does not make it on, if he makes any default in payment of tax, then and it continues for a specified prescribed period, then he will not be able to take ITC. Again, please note that this condition has not yet been made effective. There is no such time period which has been prescribed. Third condition is that where any registered person whose output tax as per GSTR 1 is more than the tax which he is actually paying in GSTR 3B. Now, this is regarding his output tax again, but then his ITC availment will be restricted. He will not be able to take ITC. So his output tax which he is showing in his GSTR 1 is higher, but but the tax which he is actually paying in his GSTR 3B is lesser. So then his ITC availment will get restricted. So again, we are saying that like in earlier condition, we saw that though the default is in with respect to payment of output tax, but availment of input tax has been restricted. Similarly, in this case also, if his output tax as per GSTR1, that means he has furnished more supplies in GSTR1, but at the time of paying tax in GSTR3B, he is paying a lesser amount of tax, then his ITC availment will get restricted. Now, for this, Rule 88C has been notified, which provides that in case a registered person has a higher output tax in GSTR1 as compared to the tax which he is actually paying in GSTR3B, then he will get an intimation from the department under Rule 88C, and then the procedure will follow. But the point here is that this output tax which is exceeding in GSTR1 as compared to GSTR3B, it should be by a specified percentage and a specified amount, which has not yet been prescribed. So rule has come into operation, rule is there, 88C, but the amount by which this amount which has to be exceeded, that particular percentage has not yet been prescribed. Similarly, if the ITC which a person is taking in his GSTR3B, when filing his GSTR3B, that means filing his return, a person has taken more ITC, higher ITC than what is actually available to him as per GSTR2B. This is as per clause section 38 subsection 2 clause B subclause 4. So if you have your Bear Act with you can refer that. Otherwise, I am explaining you the provision. So in that case, also ITC availment will be restricted. What I told you is ITC of a particular recipient as per his GSTR3B is higher than what is actually available, than the ITC which is available to that person as per GSTR2B. Because we just discussed that the ITC available to a person is reflected in GSTR2B. So in GSTR2B, whatever ITC was reflected to him, he took more ITC than in GSTR3B. While setting off his output tax liability, the ITC claimed by him was more than what was available to him as per GSTR2B by a specified amount. Now, this rule has also come into operation, that is Rule 88D, but that amount has not been specified. So practically, it does not become in operation. That because that amount has not been specified, we say that the clause says that a person shall not be liable. That means a person details of supplies in respect of which credit cannot be availed by the recipient on account of the details of said supplies furnished under section 37(1) by any registered person who during such period as may be prescribed has availed credit of input tax of an amount that exceeds the credit that can be availed by him in accordance with clause A of section 38(2) by such limit as may be prescribed. Now, this limit by which his credit, his ITC, is exceeding in GSTR3B from GSTR2B has not been prescribed in G88D, Rule 88D now. So, rule has come, but the amount, the limit has to be specified yet. Next clause says that that person has defaulted in discharging his tax liability in accordance with the provisions of section 49(12), subject to such conditions and restrictions as may be prescribed. Now, section 49(12), what does it actually provide you? So let us see first of all that. So section 49(12) provides that the person can utilize his electronic credit ledger, or he can use his electronic credit ledger for payment of output tax liability, subject to the conditions and restrictions as may be prescribed. Now, these conditions and restrictions have been prescribed under Rule 86B. In fact, the MCQ which we are going to discuss today, it will also have the application of Rule 86B. I will explain you 86B and then I will see whether you are able to apply that to this MCQ yourself or not. Rule 86B provides that in case of any registered person, where the value of taxable supply exceeds rupees 50 lakh in a particular month. So mind this, that this value of taxable supply we are computing for a particular month. So where the value of a taxable supply in a month exceeds rupees 50,000, then the registered person, while paying his output tax liability, then he cannot utilize more than 99% of his output tax liability, or he cannot pay more than 99% of his output tax liability utilizing his electronic credit ledger. In simple words, if my value of taxable supply in a month is more than rupees 50 lakhs, then when I am paying my output tax liability, only to the extent of 99% of my output tax liability. Please mind these words. 99% of the output tax liability. So if my output tax liability is rupees 100, then only 99 rupees I can pay utilizing the electronic credit, utilizing ITC, utilizing input tax credit, or I can pay 99 rupees from the electronic credit ledger. The rest 1 rupee I have to pay in cash. Even though I have a credit of 101 rupees in my electronic credit ledger, but since 86B has been attracted, so in that case, I can use only 99 rupees from the electronic credit ledger, and 1 rupee I have to pay in cash, even though I have 2 rupees in my electronic credit ledger still unutilized. So this is the restriction which 86B provides. So if in this 86B is attracted in any recipient's case, and what he has done is he has actually utilized the entire amount from electronic credit ledger. He has used ITC to pay his entire output tax liability, though he was liable to pay only 99% of his output tax liability from the ITC amount. Then Rule 38, Section 38 will get attracted. Section 38, subsection 2, clause B, subclause 5. Then in that case, his input tax credit for future periods will get restricted, and any other class of persons as may be prescribed. So this is one of the conditions for availing credit, that these conditions should not be attracted while availing input tax credit, because you know that in all these conditions, a registered person or a recipient's input tax credit availment is being hampered, or input tax credit availment for a person is restricted. So if any of the clauses of Section 38, subsection 2, subsection 2, clause B are being attracted, then in that case, that person will not be able to take ITC on his inward supplies subject to this particular section. So once again, I will repeat this clause. The details of input tax credit in respect of said supply communicated to such registered person under Section 38 has not been restricted. If no such restriction exists, then that person can take ITC. So the ITC availment is subject to restrictions imposed under Section 38, and these restrictions we have just discussed. Next clause is subject to provisions of Section 41. Tax charged in respect of said supply has been actually paid to the government, either in cash or through utilization of ITC admissible in respect of said supply. Now, this clause is saying tax has actually been paid to the government. So when I say tax has actually been paid to the government, it means that the tax should be paid by the supplier. Who is taking the credit? Recipient is taking the credit. But here, the condition which we are specifying in Section 16 for payment of tax is, or the responsibility of payment of tax is on the supplier, because you know that on any supply transaction, generally who is liable to pay deposit tax with the government? It is the supplier. So supplier must have deposited the tax on the government on which recipient is availing the ITC. Now, generally what happens, Section 40, now this provision is subject to Section 41. Section 41 says that a person who has purchased any goods or who has availed any services, he can avail credit on GST paid on those supplies based on Section 41 provisions, which provides that the ITC can be taken on the self-assessed basis. I have made so many purchases during the month. My supplier has shown them in his GSTR1. So GSTR1 does not mean the supplier has actually paid tax. That is why Rule 88C came into picture, because they want to ensure that supplier makes the payment also. 88C has been introduced because of that reason only, that if my supplier has shown it all my supplies in his GSTR1, I took credit on the basis of that, and later on my supplier does not pay tax on those supplies in GSTR3B. Then I had taken the credit on self-assessed basis, but then there is a default in payment of tax. So this provision plus Rule 88C ensures that your supplier makes payment of tax which he is of on the outward supplies which he is showing in his GSTR 1. So in GSTR 1, he made certain he furnished certain outward supplies, but in GSTR 3B he has not deposited tax on them. Then this clause will again get attracted. That I had taken credit on self-assessed basis. What I have to see is that whether my supplier has shown his outward supplies in GSTR 1 or not on the basis, and it is there in my GSTR 2B. I took credit on the basis of that. That is what section 41 also provides of 41 of CGST Act. Then I can take credit on self-assessed basis. So I had taken credit of that amount. Now later on, I came to know that my supplier has not paid the tax. So supplier has the time limit for paying the tax, the outer time limit for with the supplier for making payment of the tax is 30th September of the next financial year in respect of an invoice issued in or credit availed in a particular financial year. So for example, I have made some purchases in January 2022. And I availed credit in that particular month only because my supplier has shown those purchases in his GSTR 1 and they are duly reflected in my GSTR 2B. But my supplier has only shown it in his GSTR 1 while furnishing his return in GSTR 3B, he did not actually pay tax on those purchases. And this continued till the month of 30th September 2023. So till 30th September 2023, tax on those purchases on which I availed ITC in January 23, tax has not been paid by the supplier. So what will happen in that case, that amount of ITC which I have taken in January, I have to reverse that amount in the return filed on or before 30th November. So it will be basically in the month of return of October month, I have to reverse that ITC which I had taken in January because my supplier has not paid tax on those purchases till 30th September 2023. So I have time till 30th November 2023 to reverse that ITC which I had wrongly taken because my supplier has not paid tax on that. And this is the primary condition for availing ITC. So that tax has to be reversed by me till 30th November in the return for the month which will be filed till 30th November. Now 30th November is not a return filing date. It is actually a 20th November. Basically, generally we have to file monthly returns till 20th November for the month of October. So there can be a delay for that purpose. 30th November date has been specified. But if I reverse that till 30th November, then it is fine. If I do not reverse it by 30th November, then I have to, and I reverse it afterwards, then I have to pay that ITC amount along with interest. So interest liability arises after 30th November. And whenever my supplier pays that amount or deposits it with the government, then I can again take the credit. So this is also an important condition that the supplier has to actually pay credit to the, actually pay the tax to the government, then only recipient can take the credit. If on self-assessed basis, recipient has taken the credit, then till 30th September of the next financial year, he has the time. But in case supplier does not deposit that amount, then that will be reversed by the recipient till 30th November of next financial year. So I hope with this, all the conditions for taking ITC are clear to you. We have done Rule 86B also, which provides that where value of taxable supply in a month exceeds rupees 50 lakhs, then the registered person can utilize only 99% of the output tax liability, or he can utilize ITC for paying output tax liability only up to the extent of 99%. Rest 1% he has to pay in cash, even though he has credit in his account. We'll see that example in our MCQ also, that how it gets attracted. Now here the important point here is that in 86B, the value of taxable supply, it does not include value of exempt supply. Now that is very obvious actually. Plus it does not include the zero rated supply. So value of taxable supply, excluding exempt supply, excluding zero rated supply.
Now, Shefali madam, one
Yes.
question is there actually.
Yes.
This is actually my question.
Mm-hmm.
What people are doing, what I have observed,
Yes, sir.
that people have got a lot of ITC standing in their books. And 1%, as you said, as per rule 86B, you were telling me.
Yes, so 86B
So
restricts
people
that.
are actually not complying with the rule, basically. What I have observed is. So what would happen in that case if the people are not complying with that rule?
So then in IT, their ITC availment will be restricted. Actually, this is what Section 38 has been providing. Section 38 provides that in case somebody is not complying with Rule 86B, then his
Okay.
ITC availment, corresponding ITC availment for future periods will be restricted. I will once again repeat that clause,
Acha,
which
okay.
is given in Section 38, so it can be clear. Section 38, subsection 2, clause B, subclause 5 provides that in case any person has defaulted in discharging his tax liability in accordance with the provisions of Section 49, subsection 12. Now, Section 49, subsection 12, sir, actually provides 86B. Rule 86B is subject to Section 49(12).
Okay.
So, subject to, because conditions for Section 49, subsection 12 are provided in 86B, and that provides that you can take credit only up to 99% if your value of taxable supply is 50 lakh rupees. So, if he is not complying with 86B, then definitely his ITC availment will get restricted.
Okay. Okay.
So now with that we come to the MCQ. Now let us see first of all the information given in the question. The balance of ITC with YPL after discharging GST liability for April month was 60 lakhs. So this is the opening balance of ITC which is available with YPL. The eligible ITC reflected in GSTR 2B with respect to May month was 56 lakhs, whereas the input tax paid by it on the invoices received during the May month was 75 lakhs. Now, this information which is given to you, that the ITC reflected in GSTR 2B was 56 lakhs, whereas actual ITC on the invoices received, so total invoices which he has received for the inward supplies was of rupees 75 lakhs, but only out of which only 56 lakhs for the invoices of amount 56 lakh, the suppliers have furnished the information in their GSTR1, or details of these invoices has been furnished by the suppliers in GSTR1, and because of which it has been reflected in his GSTR2B. When we say eligible ITC reflected in GSTR2B, then it is very imperative, very obvious that his suppliers has only furnished the details of invoices of rupees 56 lakhs in their GSTR1, because of which only amount of 56 lakh is reflected in his GSTR2B. So rest of the amount is not reflected in GSTR2B. You know what has to be done in this case. Further, the output tax liability for the month was 110 lakhs. So this is also an important piece of information which conveys you that whether you have to take the entire credit or you have to take partial credit, because we just read about Rule 86B, which are also discussed, the significance of Rule 86B. So he was not sure about the amount of ITC to be availed for the month of May, for which he consulted CA Kailash, and after following his advice, GST liability for the month was discharged by YPL fully through its balance in its electronic credit ledger only. Now, this is what sir was actually telling people are doing. And in our case study also, YPL has done on the basis of advice which he received from Mr. Kailash. So we have to see whether he did right or he did the correct thing or not. So let us come to our MCQ. With reference to information given in para 2, how much balance in electronic credit ledger would have been available with YPL after discharging its GST liability? So we first of all have to see how he has to discharge the GST liability for May month. Yes.
Four options.
4 options are given to you. So let us go to the information once again and try to compute that how he must have discharged his ITC, his GST liability, output GST liability. Then we'll get the answer ourselves that what will be the balance of ITC which will be available in his electronic credit ledger after the May liability. So this was his initial balance, that is 60 lakhs. For the month of May, the invoices which have been uploaded in GSTR1 of the suppliers and reflected in GSTR2B was 56 lakhs. So this 75 lakh is of no use to us, because this was the invoices, or this was his actual purchases, but the invoices pertaining to only 56 lakh have been actually uploaded have been furnished in GSTR1. So the credit available for the month of May will be 56. Initial balance was 60. So it makes it 110 lakhs. The total ITC, which is available in his electronic credit ledger for the purpose of set-off. Now, the information which is given here is output tax liability for the month is 110 lakhs. Now this, when you see, the moment you see 110 lakhs, Rule 86B should get clicked in your mind. Now you have to, you have to keep this in mind, Rule 86B in mind, while doing any question in IBS, as well as while doing any question in your GST paper, also paper 5, indirect tax laws, because we generally tend to, or students generally tend to forget this. What they do is they see outputs, outward supplies, they compute output tax, then they see inward supplies and they set off. They see the set off. Any reversal provisions are attracted, they apply the reversal provisions. After that, whatever credit they get, they set off that and they come to the net tax payable. But this Rule 86B it is generally seen that students tend to forget this and they don't consider that in their questions. But you have to see whether the total value of supply in that particular month, whether it is up to rupees 50 lakhs or it exceeds rupees 50 lakhs. Because in case it exceeds 50 lakhs, then Rule 86B will get attracted and you have to consider that also. Now here the output tax liability is 110 lakhs. You have not been given rate of GST in this question. That was obvious because had it been given to you also, then also it is very apparent when output tax liability itself is more than 50 lakhs, then the output tax liability is more than that, then your value of supply would have been much more than 50 lakhs, because value of the output tax liability is 110 lakhs. It means value of taxable supply is in no case more than 50 lakhs. Now, when value of taxable supply is more than 50 lakhs, then what the provision says, Rule 86B provides that only 99% of your output tax liability can be discharged from your electronic credit ledger. In your electronic credit ledger, you have a ITC of 116 lakh. It was actually 116 lakhs here. So you had a credit of 116 lakhs in your electronic credit ledger. Your output tax liability is of 110 lakhs. But only 99% of this can be discharged from the credit ledger, from electronic credit ledger. So I think it will come around 108.10. And with this, so only this much amount can be discharged from the electronic credit ledger. Rest has to be paid in cash, though he has much more than this amount in his electronic credit ledger. But since 86B get attracted, so he cannot pay entire amount from his electronic credit ledger. Remaining amount, which comes to 7.10 lakhs, has to be paid in. I think, no, sorry. This much amount he will utilize, 7.10 will be, we get difference. Mm-hmm. So, in fact, we need a calculator for this. Let me have do it once again so that. Yes.
108.90.
It will be 90.
Now it is.
Okay. So, so your output tax liability was of 110 lakhs. 99% can be utilized for paying, 99% can be paid utilizing ITC, that is 108.90 lakhs. So out of the total available balance of 116 lakhs, 108.90 we have utilized, and remaining amount will be there in your electronic credit ledger, which will come to 7.1 lakhs. That will be available in your electronic credit ledger. Point which was important here is 86B. Rule 86B has to be applied while considering the output tax liability, or while utilizing your ITC for payment of output tax liability. Only 99% of the output tax liability can be paid utilizing ITC. So in this case, our output tax liability was 110 lakhs, out of which 99%, 108.90 lakhs can be paid by from the ITC amount. The rest has to be paid in cash. So from our total balance of 116 lakhs, we utilize 108.90 lakhs. Balance which is left with us is 7.10 lakhs. And this becomes the correct answer. So let us see whether we have that as an option or not. So first option is 11,60,000. Second option is 7,10,000, which is the correct option. So B is the correct answer. Okay. I hope you are clear.
So students, are you able to see that how much minutely Shivali madam has explained to you? So students, this much depth is required to answer the questions which are appearing in the IBS related to direct tax, related to GST, related to FR, and advanced financial management, also practical related, application related.
This is required for all the final papers.
Yes.
Very,
So professional level is required, students. So you have to prepare yourself, or application orientation should be there in each and every case.
Very true. So this MCQ we have covered. Now next MCQ is MCQ 2.5, which is with reference to information given in para 4, what would be the value of supply? Now we have to, when we hear the words value of supply, immediately what comes to our mind is section 15.
Can we take break of 5
Yes,
minutes?
sir. Yes, sir. We can take.
Yes, students, break for 5 to 10 minutes, and then we will continue our lecture.
Welcome back to the session, students. So we continue from where we had left regarding para 2 valuation, para 4, I think, for valuation. Because this question, yes, MCQ 2.5, it is with reference to the information given in para 4. Now, as I already told you, when you hear the words value of supply or at the mention of the words value of supply, section which comes to our mind is section 15, because section 15 contains the provisions regarding the value of supply or determination of value of taxable supply for the purpose of determining GST liability. So before going through the information given in para 4, we'll go to para 4, but we'll go through the information only after understanding the provisions of section 15. Let's have a broad understanding of section 15. Section 15 provides, subsection 1 provides, the value of taxable supply shall be the transaction value. Now, what is transaction value? Transaction value is the price actually paid or payable for a supply of goods or services where the supplier and recipient are not related and where price is the sole consideration for supply. So this is very important that supplier and recipient should not be related. So this is the price which is payable by the recipient to the supplier or that particular supply of goods or services. Then this is the sole consideration. That means there is nothing which is flowing from the recipient to the supplier. Then only the transaction value, the sale value, or you can say the value which has been determined for that particular contract, which is actually paid or payable by the recipient, shall be considered as the value of supply for the purpose of GST. Second thing is this supplier and buyer should not be related. Now, why these two conditions have been prescribed here? Because the existence of these two conditions can affect the value of supply or the sanctity, the genuineness of the price which is being paid by the recipient to supplier. Because if supplier and recipient are related persons, then there is a possibility that supplier charges a very minimum value, which is not the open market value of the goods from the recipient, and for what purpose it is being done? To keep their GST liability to the minimum. So there can be an arrangement between supplier and recipient that he will charge very less amount and he can get paid from the related person in some other way. So that will reduce the GST liability if the transaction value is reduced below the reasonable level. Similarly, if price is not the sole consideration, so what he has actually done is he has charged only 100 rupees for the goods which actually cost 1000 rupees, and remaining 900 rupees he has taken from the recipient in some other manner. So in case these two conditions are not satisfied, then you will not take transaction value as the value of supply. And reason we have seen that only thing is the department wants to ensure that this is the price which is actually paid by the recipient to the supplier for the supply of goods or supply of services. So there we have a specific definition for related person provided in explanation to section 15, which provides various clauses. Right? For example, the director of one company or one entity is directors and officers of one business are the directors and business of another business. Then two entities, they control a third entity, or two entities control a third entity, or a third entity controls two entities. Then one person controls other person. So there are a lot of examples. Employer-employee relationship, that is also a related person. So in any of these categories, if the supplier and recipient are falling and they are related persons, then their transaction value will not be considered as the value of supply. In that case, we have to go to the valuation rules, which are separately prescribed for each of these cases. But in case where the transaction value, where the price paid or payable or the transaction value is between unrelated supplier and recipient, where price is the sole consideration for the supply, there is no other consideration which is flowing from recipient to supplier, then we will take transaction value as the value of supply. Now, subsection 2 of section 15, it provides certain inclusions and exclusions from the value of supply. That means while determining value of supply, in this transaction value or price actually paid or payable, we will include these amounts also. Because our question in this case study will depend on this section 15 only. And these inclusions and exclusions we have to take into consideration while determining the value of supply. First is any taxes, duties or cess or fee or charges levied under any law for the time being in force other than CGST Act, SGST Act, UTGST Act, IGST Act and GST Compensation to States Act 2017. And these taxes or duties or cess, etc., should be charged separately by the supplier. So the basic crux of this clause is that any taxes which are not subsumed into GST, if they are being charged by your supplier and they are charged separately, they are indicated separately in your invoice, then that amount has to be included in the value of supply. For example, the municipal tax, stamp duty, then you have the property tax, road tax. If that is being shown in your invoice as a separate tax apart from your value transaction value, then that will be included in the value of supply, because that is not a GST. That is not GST. That is not CGST, SGST, IGST, UTGST. So any tax apart from GST is includable in the value of supply. But condition is that it should be charged separately in the invoice by the supplier. Second condition is any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient of the supply and not included in the price actually paid or payable for goods or services or both. So this is also a way of breaking your consideration, breaking your transaction value. So this could be a case. So any amount which actually was the liability of supplier. So supplier has to purchase certain goods, and so he had to purchase that goods for the purpose of supply. But what he did is he asked the recipient to pay for those goods on behalf of him. So recipient has paid those goods. Now, while issuing the invoice, he has not included that amount. For example, the total consideration was for a particular contract was 10,000 rupees, out of which there were some goods of rupees 400, which supplier has to buy for providing that particular, for making that supply. Now, these goods he has asked actually the recipient to buy for him and give it to him. Now, this recipient will buy these goods on behalf of the supplier. So this amount recipient is paying on behalf of the supplier. This amount will be included in the value of supply. So he cannot charge only 600 from the recipient. He has to, value of supply will be complete 1,000 rupees. He will charge only 600, but the value of supply will become entire 1,000 rupees. The amount which recipient has paid on behalf of the buyer, that will also be included in the value of supplier. Third is the incidental expenses. Now, any incidental expenses, any ancillary expenses with regard to supply shall also be included in the value of supply. Now, examples of incidental expenses can be your packing charges, weighment charges, then any kind of commission is there, inspection charges are there, testing charges are there, installation and commissioning charges. Then there can be loading of goods, unloading of goods. For that, some charges are being levied. So all these charges are the incidental expenses for the supply. For making a supply, these charges have to be incurred. These cost, this cost has to be incurred by the supplier. So even if it has been separately charged from the recipient, they shall be included in the value of supply. So any installation, testing, inspection, packing, designing, commissioning, then testing, inspection charges, if they are being levied or they are being charged by the supplier separately also, then they will be included in the value of supply. Next is the interest or late fee or payment for delayed payment of any consideration for any supplier. So in case a person makes payment after the stipulated period, and for that late payment, the supplier has charged any interest or late fee for making the delayed payment to the supplier by the recipient, and that will also form part of the supply, because this could also, that will includable in the value of supply. Why we are including all these charges? Because the department considered, or the law feels, that this could be a way of breaking the total consideration into different parts and thereby reducing the value of supply and thereby reducing the GST liability. So in the way of interest also, if anything is being charged in the name of interest, then that will be includable in the value of supply. Next is subsidies directly linked to the price, excluding subsidies provided by central government and state government. Subsidy grants, if they have been received from the government departments and they are directly linked to the price, then they shall not be included. They are not to be included in the value of supply. But this subsidy, if it is received from a non-governmental organization, it is directly linked to the price, then that will be includable in the value of supply. Now, for example, if a subsidy is linked to is not linked to the price, it is a blanket subsidy. It is a lump sum subsidy. A person is getting a subsidy of 1 lakh per month from ABC NGO, then that will not be includable in the value of supply, because though it is received from a non-governmental organization, but it is not directly linked to the price. Other case could be it is received from a central government, but it is not directly linked to the price. So if it is received from central government but not directly linked to the price, then also it will not be excluded. So it should be directly linked to the price, excluding the subsidies received. So any subsidy received from the central government or state government shall be excluded. Otherwise, if it is received from a non-governmental organization and directly linked to the price, then it shall be included. After that, we have the discounts. Now, any discount, so discounts are also excludable from the value of supply. And general nature of discount is also, when we think of discounts, we feel that it should not be generally included in the value of supply. So if discount amount is there in the value of supply and we have been provided in the question information regarding discounts, then how can we determine that whether we have to include that discount from the value of supply or we have to exclude it from the value of supply? There are two types of discounts. One is a discount which is given before or at the time of supply. So till the time we have made the supply, if we have given the discount, if the discount is given by supplier to the recipient, then what will be the treatment? And second is the post-supply discount. That means after the supply has been undertaken or after the supply has been effected, then the discount is given, then what would be the treatment? First is if the discount is given before or at the time of making the supply, then that discount will be deductible or it shall not be included in the value of supply, provided that discount is recorded in the invoice. So condition is that this discount is recorded in the invoice. For example, trade discount. So we say that if you are purchasing 10,000 units of our goods, then you will be given a discount of 10%. And at the time of supply itself, supplier has given that discount to the recipient. That is a discount which is recorded in the invoice. It was given at the time of supply. So that shall be excluded from the value of supply. That will be taken into consideration while computing the value of supply. It will be excluded. Second is after the supply, if discount has been given. Now that is actually a bit complicated, because if discount has been given at the time of supply, it is very easy. It is very easy to consider that discount because you know that discount at the time of supply. Invoice also has that discount in it, and we can simply exclude it from the value of supply. But if a discount is given after the supply has been done, so what I would have paid the entire consideration to my supplier, which was there as per the contract. And after effecting the supplier gave me some more discount or some discount after effecting the supply has been given to me. Now, how that discount has to be considered? Now, that discount can also be excluded from the value of supply, but only thing is you have to fulfill two conditions. First condition is that the agreement or this discount should have been established in the agreement or contract entered into before or at the time of supply. So that means this discount, though it has been given after the supply, but this discount was there in the contract at the time of making the supply itself. The supplier has made it clear to the recipient that you might get this discount if you fulfill these conditions. So he made the recipient aware about this discount at the time of before or at the time of making the supply. Second thing is this discount is directly linked to the price. So it can be worked out invoice wise. So every invoice we can find out that yes, this is the amount of invoice this is the amount of discount which has to be effected in this invoice. Then only this discount will be excluded. It should not be a lump sum discount. That means it should not be so that at the time of making the supply, supplier has told the recipient, I will give you a discount of 1,000 rupees on purchases of on whatever goods you purchase for next 2 months. Then it cannot be linked to an invoice. So it should be directly linked to a particular invoice. You should be able to work out that discount which is granted on a particular invoice. The supplier has to tell about that discount at the time of making the supply itself. It should be established in the agreement that this discount can be given to the recipient. And the most important condition, that is the reversal of credit by the recipient. Because just now we had seen about the input tax credit. The recipient takes the credit at the moment he gets the goods in his factory, or the moment he avails the services in that particular month, he avails the ITC also. and he might have made the payment also. That is secondary, but he takes the he takes the ITC, he avails the ITC when he receives the goods or he receives the services. Now there is a possibility then when a supplier is giving discount to the recipient after making supply, the recipient would have taken credit on the same. And in case the recipient has taken the credit on the same, then how can the supplier reduce the amount of value of supply at his end only? Because the recipient has taken the credit on the entire value. 100 rupees is the value of the goods on which the supplier, after making the supply, offers a discount of rupees 20. This was provided in the contract in the very beginning itself, that 20 rupees discount, cash discount can be given if the recipient makes payment within 15 days. Now, recipient makes the payment within 15 days, he gets a discount of rupees 20. So at the time of supply, recipient has made a payment of complete 100 rupees. Sorry, not at the time of supply. He has promised to make the payment of rupees 100 in within 15 days. Now, at the end of February, this contract takes place or this transaction takes place. In the next month, the recipient makes the payment on time. Now, in the month of February, for the month of February, the tax due was on 100 rupees. Suppose it is 18 rupees. So, entire 100 rupees was liable to GST and tax of 18 rupees was paid. And in fact, recipient has taken credit of the same also for the month of February. In the month of March, when before the stipulated period of time, recipient makes the payment. So, he gets a discount of rupees 20. Now, supplier has made the payment on 20 rupees also of GST. Recipient has also taken credit on of GST on rupees 20, but now it does not form part of value of supply. But it will not form part of value of supply only if this recipient also reverses ITC, which is taken on this value of rupees 20. Okay. So in this, on this value of rupees 20, if he has whatever credit he has taken, whatever GST credit he has taken on this value of rupees 20, he has to reverse that. How will that be done? The supplier shall issue a credit note to the recipient for rupees 20 plus the GST amount. At the rate of 18%, it will become that 3.6 rupees, I think. Yes, 3 rupees 60 paisa is the GST amount. So this 20 rupees plus 3.6 GST amount, he will issue a credit note to the recipient, and recipient will reverse the amount. First of all, he will reduce his value of supply by 20 rupees and he will reverse the credit of 3.60 from the total credit which he has taken on 100 rupees value. On the value of rupees 100, he must have taken a credit of 18 rupees because we are considering 100 rupees to be exclusive of GST. So on that 18 rupees GST must have been charged by the supplier at the time of making the supply. Now afterwards, he offers him a discount of rupees 20. That means the credit of 3.60, 3 rupees 60 paisa on this 20 rupees has to be reversed by the recipient in order to actually reduce the value of supply of that particular goods or services by rupees 20. So value will become 80 only when recipient reverses credit of 3.60. Supplier issues a credit note to the recipient for this, and this can be matched or this can be actually linked to the particular invoice that was established at the time of making the contract, that he will be given that discount. So examples of post-supply discount can be, the most common example is a cash discount. Then the other examples can be volume discount, quantity discounts, which are, suppose a supplier promises that during the year, if you purchase a quantity of more than 10,000, you will be given a discount of 1% on all your invoices. So that is known only at the time, only when year ends. So that can be given only after the supply has been effected, but it was known to the recipient at the time when supply was effected. This can be easily linked to each of the invoices. And only thing the recipient has to ensure that he reverses the tax or ITC which he has taken on those invoices. Okay, so then in that case, that can be reversed. So this is the condition for post-supply discount. But in case discount was known at the time of making the supply, then there is no issue. You can simply reduce that provided it is recorded in the invoice. Now, with this information, let us move to the question which we have, because question requires us to compute the value of supply of the machinery. The para 4 has information as YPL bought a machinery from Dusham Limited for its business, for which YPL received a government grant of rupees 6 lakh. The details of machinery are as follows. Now, he has received a grant, government grant. Okay. We just saw that the grant received from the state government is excludable. That is not to be included in the value of supply. Subsidies received from a non-government organization directly linked to the price have to be included. But the important point here which we have to notice is that this grant has been received by YPL. Whereas the subsidies, grants which we are talking about, they are received by the supplier, and supplier has reduced his price by that amount or not, that is important. But here the grant is received by YPL, who is a recipient, who is not a supplier. Supplier is actually Dusham Limited. So Dusham Limited has not received this grant. Whatever grant YPL is receiving for that particular supplier, that is not to be considered at the time of computing the value of supply. So this 6 lakhs become irrelevant for us. Second is list. Now, next information is list price of machinery exclusive of taxes and discounts. Now, this list price is before any taxes, before any discount, 30 lakh rupees. Next is corrugated boxes used for packing the equipment, not included in the price. Categorically, very specifically, they have provided that this corrugated boxes, this packing amount is not included in the list price. So while discussing section 15, we just discussed that packing charges are the incidental expenses and therefore they are includable in the value of supply. So corrugated boxes used for packing are the incidental expenses and therefore the 60,000 amount will be includable in the value of supply. So 60,000 will also be included in 30 lakh rupees and this will make our price 30 lakh 60,000 rupees. Next information which is given to us is discount at the rate of 2% is offered on the list price of the machine recorded in the invoice of the machine. Now, this 2% discount, see, this discount is offered on the list price and it is recorded in the invoice. Now, any discount which is recorded in the invoice, that means it is given at the time of making the supply. So there is no question of post-supply discount. It being a post-supply discount, this cannot be a post-supply discount. This is given at the time of making the supply. It is duly recorded in the invoice. So it becomes a discount which is given under section 15, subsection 3, clause A, and it is allowed from the value of supply or it has to be deducted from the value of supply. So we have to compute 2% of 30 lakhs. That comes out to 60,000. And that will be reduced from the value of supply. So 60,000 packing charges will be added and 60,000 cash discount will be reduced by virtue of section 15(2) and section 15(3). Now, as a part of its policy, YPL depreciates all its plant and machinery at 20% per annum on straight line basis, and also it does not claim depreciation on GST component included in the price of plant and machinery. So the question which is provided to us is only for the computation of value of supply. So this information which is provided after the table is not relevant for computing the value of supply under GST. Let us see what would be the value of supply here. So our value of supply which came to the information given in para 4 was 30 lakhs plus 60,000 minus 60,000. So it came to 30 lakhs only. So we are given with the options. Let's see what are the options which are available. With reference to information given under para 4, what shall be the value of supply for the machinery supplied by Dusham Limited to YPL? So this will be option D. Option D is the correct option because all other options are not matching our answer. 30 lakhs will be the value of supply. In fact, so with this, we come to an end to discussion regarding GST in this case study. And before winding up regarding GST portions, we have a GST query also in our query section.
Yes.
So the student is Don James.
Yes, Don James is asking, is the Saransh fully provided is fully updated for May 24? This is the first thing he is asking. Especially in IDT section 10, subsection 1, clause A, provision is not updated, as well as the amendment in respect of compulsory registration of suppliers through e-commerce operator is also not reflected in the Saransh.
Okay. James, as regards the Saransh for indirect tax laws paper 5, I can tell you that it is updated for May 2024 examination, and the statutory updates which is hosted on the website along with study material, it has taken into consideration that. In fact, the amendment which you are referring in section 10(1)(a), so you have not referred the act which you are referring. In section 10(1)(a) of the CGST Act, there is no amendment as such in recent times. So it is, and in fact, whatever is position is there, it is reflecting the current position of law. Our charts are updating reflecting the current position of law for CGST Act. For IGST Act, there is an amendment in over-the-counter sales. Place of supply for over-the-counter sales has been incorporated under Section 10(1)AA. That is a new amendment, but that is very well included in the chapter of place of supply. Second is you have mentioned about amendment in respect of compulsory registration through e-commerce operator. So in case of, I think you are talking about the amendment through which now earlier e-commerce operators who are, when a person is supplying services through e-commerce operator, there was a threshold limit of 20 lakhs which was available to that person. Now similar kind of threshold limit has been made available to supplier of goods also through e-commerce operators. Now that is there in registration chapter. That amendment has also been included. But in case any other amendment you are talking about, then you can write to us. You can ask your query through BOS app. So through BOS app for IDT final, you can post your query and you can mention if any other amendment you're referring to, because both these amendments are there in your Saransh. And in fact, Saransh has a pictorial representation of all the concepts which are discussed in study material. For direct taxes also, this Saransh has been now recently launched. And for auditing, I suppose it has been updated, sir. So that is there. So you can make use of Saransh. It will help you in this, especially in IBS paper, it will be very useful for you. So my discussion for the
Thank you. Thank you, Shivali Madam. Shivali Madam, in fact, has explained fully the entire chapter of valuation. So students, the kind of, you see, the kind of explanation Shivali Madam has given, it is something great and you should be benefited out of it. So thank you very much, Shivali.
Thank you, sir. So should...
No. Yes, students, two questions are remaining.
I will take your leave, sir.
Okay, thank you, Shivali. Yes, students. Now, one question which is relating to auditing. One question which is relating to auditing is question number 7 with reference to information given in para 2. Yes, I show you para 2. With reference to information given in para 2 of the case study. Yes, this is the paragraph, students. Further, CA Kailash determined that there were certain factors that indicated the existence of certain transactions for which misstatements of lesser amounts than materiality for the financial statements as a whole. ये मैंने आपको explain किया. This is called performance materiality. So students, you go to essay 320 and you, all of you have studied essay 20 in detail in CA intermediate, at CA intermediate level, and performance concept of performance materiality is there. Just go through the relevant para of performance materiality. Para 10 is there, and the question which is being asked is with reference to information, what kind of factors the students, the question is also asking about what kind of factors might be there that would have indicated existence of certain transactions entered into by YPL for which Mr. Kailash was required to lower his materiality. So the answer, if you go to the answer, I show you the answer of this question. You see the answer. As per essay 320, materiality in planning and performing in audit, factors that may indicate the existence of one or more particular classes of transaction, account balances, or disclosure for which misstatements of lesser amounts than materiality for the financial statement as a whole. Materiality for the financial statement as a whole or lesser amount could reasonably be expected to influence the economic decision of users taken on the basis of financial statements include the following. So this is something, this is about performance materiality. So auditor sets the materiality, overall materiality level of the financial statements, then performance materiality, level of performance materiality is set lower to the overall financial overall materiality for the financial statement as a whole. Say if the materiality for the financial statement as a whole is set at say 10 crore rupees, for example 1% of turnover, and benchmark is turnover. You all of you understand how the benchmark is selected. You should study in the SA 320 benchmarks, about benchmarks. That is also very important topic. So say materiality for the financial statement as a whole is 10 crores, and performance materiality. Now performance materiality, what it is exactly? The auditor shall determine materiality for the financial statement as a whole if in specific circumstances of the entity there is one or more particular class of transaction, account balance or disclosures for which misstatements of lesser amounts than materiality for the financial statements as a whole could reasonably be expected to influence the economic decisions of the user. The auditor shall also determine the materiality level or levels to be applied to those particular class of transaction, account balance or disclosures. So let me explain to you the meaning of performance materiality. Performance materiality means the amount. Performance materiality means the amount or amounts set by the auditor less than, say, financial. If the materiality for financial statements as a whole is 10 crore, then the performance materiality is near. The auditor will set the performance materiality say at 7 crore of rupees. Say for 7 crore. Why? Why he sets the lower amount than the then 10 crores, which is materiality for the financial statements as a whole? Because there are also, you will appreciate, because there are also uncorrected and undetected statements. Because so that this together with uncorrected and undetected misstatements, क्योंकि ऑडिट प्रोसीजर स्टूडेंट्स आप कितने भी लगा ले, उसमें डिटेक्शन रिस्क तो रहेगा ही रहेगा. सो टू कवर द डिटेक्शन, अनडिटेक्टेड misstatements would be there, uncorrected misstatements would be there, means which the auditor has recommended for correction but the management did not agree to correct. So uncorrected misstatements might be there, undetected misstatements might be there. So students, if there are uncorrected misstatements, if there are undetected statements, so that's why auditor lowers his materiality level. The auditor lowers his materiality level so that this materiality level, which he has lowered the materiality level together with uncorrected and undetected misstatements, doesn't exceed the overall materiality level for the financial statements as a whole. So let me read out the definition for you students. Performance materiality means the amount or amounts set by the auditor at less than materiality for the financial statement as a whole to reduce to an appropriately low level the probability. क्या probability auditor reduce करना चाह रहा है? That the aggregate of uncorrected and undetected misstatements exceed materiality for the financial, exceeds materiality for the financial statements as a whole. If applicable, performance materiality also refers to the amount or amount set by the auditor at less than materiality level or levels for particular class of transactions, account balance. So students, just go through the definition and study the concept of performance, because this question is based on the concept of performance materiality. Okay, so the factors that may indicate the existence of one or more particular class of transaction, account balance or disclosure for which misstatements of be expected to influence the. So those factors are which factors? Whether law, regulations or applicable FRF affect users' expectations regarding the measurement or disclosure of certain items. For example, related party transactions If the related party transactions are there, students, so then auditor can lower in this is the factor where the auditor can lower the materiality level and related party transaction and the remuneration of management and those charged with governance. In these materiality level, students, for account balances भी होते हैं individual, for class of transactions भी होते हैं. सो ओवरऑल मेटेरियलिटी लेवल जो ऑडिटर ने सिलेक्ट किया उससे वो कम रखेगा इन ट्रांजेक्शन की अपनी मेटेरियलिटी को भी वो कम रख सकता है. जैसे फॉर एग्जांपल ही टुक 1% ऑफ टर्नओवर उसने ये रखा था, यहाँ पे तो पॉइंट समथिंग 0.1% रख सकता है या 0.05%, तो कम कर ओवरऑल फाइनेंशियल मेटेरियलिटी फॉर द फाइनेंशियल स्टेटमेंट एज ए होल. इस केस में वो मेटेरियलिटी लेवल कम कर देगा. Yes, for this particular for this particular class of transaction, account balance or disclosures. Yes. So I hope you have understood the key disclosures, where key disclosures in relation to the industry in which entity operates. For example, the example given is in case of a pharma company, where the disclosures are required by the industry itself. Right? So there the auditor will not keep the materiality level high. So whether attention is focused on a particular aspect of the entity's business that is separately disclosed in the financial. For example, in newly acquired, if the entity has newly acquired in the case of newly acquired business, so materiality level will be lower. So in the given instances, factors as aforesaid might be there that would have indicated existence of certain transactions entered into by YPL for which Mr. Kailash was required to lower his materiality. As for such, क्योंकि for such transactions, misstatements of lesser amounts than materiality for the financial as a whole could also reasonably be expected to influence the economic decision of यूजर्स टेकन ऑन द बेसिस. तो ये बहुत इंपॉर्टेंट है लास्ट पैरा स्टूडेंट्स, इसको अच्छी तरह से आप रीड आउट कर लेना. सो दिस इज द क्वेश्चन अबाउट मेटर्निटी SA 320. एंड नाउ स्टूडेंट्स कमिंग टू द लास्ट क्वेश्चन, दैट इज MCQ नंबर 1. तो MCQ नंबर 1, आई एम कमिंग टू MCQ नंबर 1. Yes, this is the answer. I am directly going to the answer of the MCQ number 1 because this is related to I am directly coming to the answer of the MCQ 1.1. Yes, this is the answer. Because this is in this question, there is, let me touch upon this point. YPL and SPL are associated enterprise, and YPL is the holding company of SPL, or similar goods were sold by YPL to UPL, and UPL is unrelated party, and comparable uncontrolled price cup method is being used for determining the ALP. So all of you understand that arm length price is very important. Arm length price, because primary adjustment is on the basis of arm length price. So arm length price, students, क्या होती है? It is the price which is applied in a transaction between persons other than associated enterprise in uncontrolled conditions. So this UPL, students, this UPL is other than associated enterprise. UPL is unrelated party. As the similar goods were sold, तो ये डेफिनेशन में ALP की डेफिनेशन में लिखा हुआ है. ALP की डेफिनेशन में स्टूडेंट्स है कि between persons other than associated enterprise. So while applying this, So cup method determination of ALP करेगा, because there is, while applying the comparable uncontrolled price method, the price is comparable uncontrolled, the price in comparable uncontrolled transaction needs to be adjusted to account for difference between the international transactions and uncontrolled transactions, and the price so adjusted shall be the ALP. So ALP, to arrive at the ALP, students, as it is given in the question, price per metric ton of steel pipes to UPL, that is unrelated party, and functional differences, some students, because this is FOB price, to arrive at the CIF, so we will add cost, insurance and freight, because in case of related party YPL to SPL, it is CIF price is given in the question, which is 1 lakh rupees. CIF प्राइस कितनी दी हुई है? 1 लाख. तो कंपेरेबल बनाने के लिए स्टूडेंट्स आर्म्स लेंथ प्राइस हमने इसको ऐड कर दिया. कॉस्ट ऑफ इंश्योरेंस एंड फ्रेट विल बी एडेड टू अराइव एट द कंपेरेबल प्राइस. तो कंपेरेबल प्राइस इज 1,06,000 एंड प्राइमरी एडजस्टमेंट स्टूडेंट्स इट विल बी डन since 2000 metric tons were supplied to from YPL to SPL. So 2000 metric ton into 1,06,000 is the LP minus 1 lakh. That will be primary adjustment needs to be total income, that is 1,20,000. Hence, here the amount of primary adjustment is 120 lakhs as calculated. Accordingly, the amount of, now we will go to the yes, as per section 92 CE of the Income Tax Act, the assessee is required to carry out secondary adjustment where the primary adjustment to transfer price, because primary adjustment is going beyond 1 crore rupees, 120 lakhs है, which is beyond 1 crore. तो primary adjustment students क्योंकि 1 crore से ज्यादा है, इसलिए secondary adjustment हम where the primary adjustment to transfer exceeds, yes, we can do the secondary adjustment. तो assessee is required to carry out the secondary adjustment, must हो जाती है students, where the primary adjustment to transfer price exceeds 1 crore, तो उसे करनी पड़ेगी secondary adjustment. And primary adjustment is made in respect of assessment years 17, 18 and onwards, where as a result of primary adjustment to the transfer price, there is an increase in total income of the assessee. The excess money, and another point is students, excess money needs to be repatriated. So excess money needs to be repatriated within 90 days. The rule is of 90 days. But in case excess money has not been repatriated within the prescribed time, that is within 90 days, तो assessee को ऑप्शन दी गई. क्या ऑप्शन दी जाती है स्टूडेंट्स? कि वो एडिशनल इनकम टैक्स पे कर दे और उसे कोई इसका क्रेडिट नहीं दिया जाएगा. एडिशनल इनकम टैक्स क्या होगा? टैक्स इज एट द रेट ऑफ 18% प्लस सरचार्ज 12% फिक्स है और प्लस सेस 4%. तो दिस कम्स आउट टू बी 20.9664%, and applying this 20.9664% to 120 lakhs, it comes out to be 25,15,970. So this is in B question. This is correct answer is B, 25,15,970. So ये ऑप्शन दी जाती है स्टूडेंट्स असेसी को कि या तो वो रिपेट्रिएट कर दे, अदरवाइज उसको एडवांस मान लिया जाता है, और फिर इंटरेस्ट इनकम एक्रू होती रहेगी आपको और आपको टैक्स देना पड़ेगा. तो एंड आल्सो ऑन द अदर हैंड वन टाइम ऑप्शन इज आल्सो बीइंग गिवन दैट where the excess money is not repatriated within the prescribed time, तो assessee has the option to pay additional tax. कितना पे करना पड़ेगा उसे? 20.9664. with how it has come? Tax 18% plus surcharge which is fixed at 12% plus cess is 14%. And no, please note that no credit of this sum will be given to the assessee. No credit of this tax will be given to the assessee in any way. So this is how the question number 2.1 answer is B. So we have covered the complete case study, students. And with this, thank you very much. If you have any other question, any other doubt in your mind regarding this IBS paper, you can call me over my mobile 9466789298. You can call me, students, anytime. And if I do not call, if I do not pick up your phone at that moment of time, then I will call back you. So, students, होप यू आर डूइंग वेल एंड और आप अच्छी तैयारी करें अपनी। और किसी भी तरह का कोई डाउट क्वेरी आप रिस्पेक्टिव फैकल्टी से भी स्टूडेंट्स पूछ सकते हैं, और आप मुझे भी कभी भी फोन करके पूछ सकते हैं। यस, विद दीज वर्ड्स स्टूडेंट्स, थैंक यू वेरी मच फॉर थैंक यू वेरी मच, एंड सेशन एंड्स ओवर हियर। थैंक यू वेरी मच स्टूडेंट्स। यस